Good morning, welcome. Remember, the 5th of November, the first day we had Mini Cooper back on the show.
Thank you very much for having me, Rich. How have you been?
Mate, this makes me so happy.
Thank you very much.
The crowd have been asking, where is the, young Padawan? Unfortunately, it does come along with some sad news. Pete Ward, my good friend and trusty PCM, has left the company. Mini Cooper, you worked for Pete.
Yeah, of
obviously.
Course. Yeah. So I've been very busy on desk. So as a result, I haven't been able to do this. But I'm back now. I'm good to go.
And literally, people have been phoning you up asking, why have you not been on the show?
Yeah, I had someone I spoke to yesterday who, obviously there's two Lukes, but recognised my voice because Luke Moore's still been doing it, of course.
Mm-hmm. And you said, don't you worry, we're on tomorrow morning.
Tomorrow morning.
Good stuff. Well, it's fantastic to have you back. We'll get a life update in a minute. We've got a lot of comments on there.
Loads of comments.
Now, Rico Segal asking me to go easy on Piers this morning. Are you having a laugh? Why are we going easy on Piers this morning?
Because you're always so mean to him.
He bloody deserves it. Excuse my language, but we already had Steve Sedgwick swearing on CNBC this morning, so we're free. Let's go. What's coming up on today's show then, people? It's going to be a cracker. It's going to be certainly a day of tough interviews, and that's not me just talking about me and Minnie here. So yeah, look with us right up to 8:30. But then we've got Piers on, so that's going to be really interesting because he has been calling for a slap in the Nasdaq, as he said at the weekend. And boy, oh boy, we've started to get it this week. And then yes, you got it there. 9:10 this morning. Andrew Webley. Last time Andrew Webley was sitting in this studio, the stock price was 32 pence.
Okay.
Right? So the valuation of the company was probably about 150 million sterling.
Yeah.
It then went up to over $1 billion in the next 6 weeks.
It's crazy.
And now it's back down to, well, it must be about 150 million now.
Yeah. Because it's slightly higher than where it was when he last came in then, right?
Yeah. Sorry, no. So the stock must have been worth about 20 million on the first time, and now it's worth 150 million.
Right, okay, got you.
So yeah, but the difference being he's got 200 million of Bitcoin now.
Yeah.
Last time he was in, he had 10 million of Bitcoin.
Yeah.
So it's going to be a real interesting show this morning. If you've got questions for Andrew Webley, if you've got questions for Piers, then please send them in. We shall collate all those for you. But Mini Cooper, give us a life update. So you've been
life update.
Have you been to Sweden? Was that?
Yeah, I went to Sweden. It must have been around 3-4 weeks ago. So amazing. I was having meatballs every day. Every day, yeah.
You could have got those in IKEA.
No, we actually went to IKEA there, and that was also like delicious. However, we went to this other place. Let me check the name on my phone. And I actually had
restaurant, was it?
I actually had like hog meatballs.
Right.
Because you could have like deer, you could have bear, which I thought would be really, and rabbit, to like eat a bear or rabbit.
Bear.
Yeah. Would you say what? No. Would you eat a bear?
I've had a bull one, but I've never had a bear one.
Meatballs for the people, that was it.
Meatballs for the people.
Yeah,
so that's in the middle of Stockholm, is it?
Yeah, and it came with this amazing mashed potato. Because normally when I have mashed potato, I get microwave mashed potato, but put my own twist on it. So I put in cheese, pepper, salt, mix it up, so it tastes a little bit better. It's still not top tier, but like it's better than like the standard microwave. And because I'm cooking for myself, there's no point me like cutting up potatoes, peeling them, mashing them. So
Right. Now we know Ronnie's relationship is blossoming.
Yep.
How's the love life?
Nothing for myself at the moment.
Spending.
Why is everyone in the studio doing that?
We can hear Angeline going, from through the solid door. Well, look, it's Valentine's soon.
14th of Feb. Is that soon?
Okay, we are going to go into overnight action in a minute, but we do have a public announcement first. So, in the last couple of weeks, somebody has stolen something from Mini Cooper.
We don't know if it's been stolen or just someone's accidentally misplaced it, but my laptops went missing.
From your desk?
Yeah, well, good thing is now I've got a new laptop.
So, and this was about the same time as Pete left?
No. This was around 2 weeks ago. Pete left. It must have been around 5-6 weeks ago now.
Yeah. Right, let's go into some overnight action before we go to search for Mini Cooper's laptop. Right, I woke about 1:30 in the morning, and it was one of those evenings where I did have a look at the markets because anything could have been happening last night. I thought it was going to be Bitcoin that was going to have a tough evening, but it actually turned out to be the S&P. Look at what happened there. For the sell-off started at midnight. So as Japan opened, and you saw the S&P trade down to 67.20. The lowest I saw it was 6724. And look at that little purchase there. Eh?
There we
Mini
go.
Cooper.
Talk about timing.
£10 a point. There we go. I was awake at 1:40 a.m. Unfortunately, I thought, that was a chance to buy some of my delta against my options.
Yeah.
Hoping the market would still continue a little bit lower, but no, we've had a bit of a rally in the alley. Now, Bitcoin is that had a really tricky day yesterday.
Yeah, it went below $100,000, which is like a key point. But then, to be fair, it did come back up above it shortly after, and it is above that now. But obviously, that is that key level, and there is fear, there is worry that Bitcoin could drop even further. Because, well, when Trump got in, I think it was November the 5th, Bitcoin at that point was like in the low 60s, right? And ever since then, of course, it has done very, very well. So it's interesting to see what happens because, of course, yesterday, I was reading on Bloomberg how a lot of the Wall Street bankers came out and basically said, there's a bit of fear, obviously, with like the tech stocks and valuations. Like we saw Palantir, I think they reported Monday, and then yesterday got absolutely hammered.
Down 8% on the day, but down over 15% from the highs after the earnings were reported. And did we see the real side of Alex Karp? He was crying on CNBC as Michael Burry disclosed a short position through derivatives, which is perfectly normal. Yeah. He did it in NVIDIA as well. And as every hedge fund has to disclose their positions, especially short positions. And Alex Karp accused him of market manipulation. Grow up. Absolutely absurd.
It's not like Palantir is overvalued or anything, is it?
Some people may argue, Mini Cooper, that the valuation is excessive in some ways. So there we go, away from the numbers. Yeah, we got the new mini saws. We'll start calling you now. It is a nice hat, isn't it? And yeah, so Karp really just so childish. Like, unless the stock goes up on numbers, then everybody who either sells it or shorts it is anti-American. It's just
sorry, Rich. I've just seen the comment from Ange. There's still time, Mini Cooper. Come on, you beautiful TLWI trade live of IG. One of you must be single. Well, I can't even read the rest of that out.
I think she's trying to set you up. Yeah.
Oh, no.
I'm not sure our viewer, the target market is.
I don't think so either.
Yeah, so we have a poll on that one. So a real tricky day. But have a look at this Bitcoin chart. The last time we saw it below 100,000 was on the 22nd of June. And that was on a Sunday, and that was for a very short period of time. So it is a really interesting level, and the perfect day for Andrew Webley to be on. I have heard of some financing issues around leverage in the crypto markets. Now, this all started 3 weekends ago, when you had the problem with Binance.
Yep.
And subsequently, a lot of money was lost. A lot of people were stopped out, and it was primarily due to an issue with Binance.
The second biggest in terms of liquidations ever, so I read.
Yeah,
Yeah.
that sounds about right. But subsequently, the crypto markets really struggled to recover from this. And that's because certain leverage products that require financing, the interest rates on financing has, at some points along the way, been stretched and started to go higher.
Yeah.
Higher than potentially the returns that the funds are looking for.
Yeah.
So that's just a little bit of background there of why we're seeing such unpredictable and volatile moves in crypto.
Yeah, because Bitcoin, I think highest it's got to is 125, 126. So
Yeah.
obviously now where are we, like 101, 102?
That's right, yeah. So that also plays into this idea because in America, the same people that have got their Robinhood accounts are going to be ones that are involved in the crypto world as well.
Yeah.
Speaking, on a large scale, we know that retail have been the big buyers of the AI stocks.
Yeah.
And if they're feeling pain in crypto, especially if they're leverage, then you see the pain that goes on in these stocks here as well.
I know the feeling, Rich. I've got a bit of MSTR in my MicroStrategy, of course, in my eyes. It's not going too well at the moment.
Right. So you're
I
suffering.
think MSTR is probably around $250, whereas like my average price is like $335 roughly.
As many people's has been.
Yeah, exactly.
Right. So you had a really weak day yesterday. But look at the carnage there of the AI names.
Yeah.
7% down on AMD. We'll go on to those in a minute.
We will.
Palantir now down 10. 186. So that's the lowest we've seen it. Oracle 245. Oracle, I'm getting killed in that. So I've been long Oracle from about 290, I think. Then Marvell, we'll speak about with peers later on as well. That's at 86. Broadcom.
Broadcom there as well, like you say.
Netflix has stood strong, right? Netflix, of course, not an AI play at all, and has already sold off $100 after numbers. But
So as of late, Netflix, generally speaking, has done pretty damn well.
yeah, over the past 4 months.
Yeah.
So yeah, carnage. Shall we dive into the AMD numbers then?
Yeah, let's go into AMD.
Go on. How did they report?
So AMD reported fiscal third quarter results that exceeded Wall Street expectations, but gave margin guidance which was in line with estimates. The stock fell almost 5% in extended trading. So just some of the key numbers here. Earnings per share was $1.20 adjusted versus the $1.16 expected. And revenue, again, was greater than expected. It was $9.25 billion versus the $8.74 billion expected. Revenue increased 36%, from a year earlier in the fiscal third quarter. So from that, obviously, the numbers do look good, but then obviously given what happened and the fact that loads of Wall Street bankers came out yesterday and said about tech stocks and how they are overvalued, to be fair, from memory, I think the ratio, I think AMD traded on like 13, 14 times earnings, which, relatively speaking, compared to like Palantir, isn't actually that much. That's what I read.
No, I would question that.
That's what I read.
No. Well, we'll have a look at it. So
We'll have a look, but
expectation, let me see. So 116.4. No, it's I'd say more like 40, I think. But we'll double check that for you.
Yeah, we'll double check that. But anyway, I think with AMD though, generally speaking, it's really the only company who could really rival Nvidia. So they are investing a lot in GPUs, which is good to see. Obviously, you have got like Qualcomm, Broadcom as well, but I would argue that AMD are number 2, just behind. Well, not just behind, quite a bit behind Nvidia.
I think it's a lot in the price. So the last couple of days of reporting season, we've seen last week Amazon do well, Google has done well this season, and what's the other one that, Alphabet, sorry, Google, yeah. Really good results. And when you're at the end, after the market's already been pumped higher on such good results, then it's a case of travel and arrive. So I'm sure you've all heard of travel and arrive before, but the finance legends that talk about it's better to travel than arrive. Once you get there, you see what happens. So,
after you, sorry.
No,
I was
please.
going to say, did a partnership with OpenAI. That was on the 6th of October.
Yeah.
And AMD skyrocketed 23% that day.
Yeah.
Which is,
So
not bad at all. I think that was the option to potentially get 10% through warrants, but it's dependent upon a number of factors such as AMD share price and things like that. But of course, really positive for AMD. Because I think they did a partnership with Broadcom as well. And a video, of course, OpenAI, that is.
Everybody.
Yeah.
Everybody that's
And Oracle,
gone to visit Sam Altman, I think, has managed to get a contract now. But yet more interesting look at the Financial Times this morning, yet more intrigue with Deutsche now exploring hedging its data center exposure. So this comes from the top executives trying to work out, right, we're going to have a little bit of a panic up, as always happens. They've put out huge lending, billions of dollars in debt to the companies building the data centers, and now they're worried that those debts will come back and bite them on the behind. So Deutsche is considering shorting a basket of AI-related equities.
Not a bad idea. The thing is,
I hope it started a couple of days ago. It's also considering buying default protection on some of that debt. So that has not helped the sector.
No.
But again, this leads through everything we've been saying. AI bubble, AI bubble, AI bubble.
It's just the timing as well. Like with Trump's tariffs at the start of April, where we saw a huge drop in markets. I mean, you just never know when it is. So I'm always reading online saying, "Oh, there's going to be a correction," but no one knows when.
Of course.
And they don't say when. They just say, "Oh, within like the next 12 months." That doesn't mean anything.
Yeah, David Solomon said there's 10 to 20% downside in the next 12 months. Yeah,
it's just the timing though, because I'd say, now with Trump when he comes out and announces things such as on Twitter, then of course that does cause much bigger market reactions than what it was, let's say 3-4 years ago, when it could have been CPI or NFP. So that's generally what we were looking for on the desk, where there's more vol.
No.
But now it's more like Trump and what's he come out with?
because there is no data.
Yeah.
Let's have a look at the last paragraph of this article. Deutsche analysts said in late September that concerns were overplayed after using AI to analyze how many mentions of an AI bubble there were in English language publications since the start of the year. They concluded one AI bubble has already burst, the bubble in saying there's a bubble. So they used AI to do the analysis, and then it sounds like they used the AI to publish that piece of research as well. Okay, in the chat, Maturin, thank you. So AMD 156 backward looking on PE ratio. I think at the moment forward looking it's about 50. So between 40 and 50 on that. Poppy, we've got on the chat here. So my good friend CJ, he thinks potentially time to buy Ethereum. There's a proper clearing out process going on, but positions are now much cleaner. And talking about the Bitcoin trades about. Right, I tell you what, CJ, then I am going to follow you straight in. So where are we? Ethereum, yes, 33. We'll have, and we'll buy 3 contracts as well. So there we go. Keep CJ happy. The chairman, of course. Morning, chairman, sir. So crypto, of course, available on the for professional clients. But how else do you get crypto at IG? Mini
Correct.
Cooper.
Yeah, so of course we're FCA regulated. So as a result, only professional clients can trade crypto on derivative. However, what you can do with us, you can actually invest in physical crypto. So we currently offer 37 different cryptocurrencies, and all you have to do is once you're in your IG account, let's say if you've got an ISA or a shared or a spread bet or a CFD account, you just get the add account option at the top, and then from there you can just follow the simple steps and you'll be able to add a crypto account. And then in addition, of course, I'm sure you will know, but you can actually purchase equities. Of course, you can purchase like Coinbase MicroStrategy, but that doesn't necessarily move with the price of Bitcoin.
Yeah. Do you want to disclose that you've got a position in any of those?
MSTR, yeah. Yeah. I'm down a bit in my ISA, but I've got gold, I've got S&P.
So the problem is, of course, one of the reasons that you hold MicroStrategy in your ISA is because before you couldn't put crypto into your ISA. But now we know, we talked about 21 shares ATP and ETNs last week. And so now you can buy Bitcoin and Ethereum in an exchange traded product and put it into your ISA or SIP. That's the problem that these treasuries are having is now, because the great thing before was you could put strategy into your ISA and you had Bitcoin exposure. Now you can have pure Bitcoin exposure. And it's all, somebody like 21 Shares has actually got the asset backed in their account, and it's held in a big vault.
It's good because if not, if you realise any profits above £3,000, which is capital gains tax threshold, then you have to pay, depending upon how much you earn, CGT on it. So.
Well, but hands off our investments, Rachel Reeves.
Too right.
Because that capital gains could be changing, Mini Cooper, right?
Yeah.
And, did we hear about it last night? Because Liz Truss, of course, telling us yesterday, as we reported live on air, telling us that income tax, there is a chance that there could be a rise there.
But in the manifestos, you said initially you wouldn't raise income tax, national insurance or VAT. So
she was quizzed last night. Will you resign if you increase tax and break the manifesto pledge? Do you know what her reply was?
What was her reply? I just read about it.
Can you imagine what would happen to financial markets then?
Really? I can't tell if you're joking or not.
I swear. She was interviewed. Let's see where she was interviewed. I don't think it's in this article.
I read a nice article which Beachy wrote on it, and I'm quite surprised that Beachy hasn't put anything in like that. So I know how much Beachy loves her.
Yeah. Screen off, please, guys. So let's see if we can. Actually, I think it was on the front page. It's not even in the business section. It's on the front page.
Obviously, you've got corporation tax, council tax, business rates, and fuel duties. They are the next biggest revenue generators after the income, national insurance, and VAT.
Yeah.
But I mean, increasing, let's say, like if you increase corporation tax, you really don't want to do that because she was talking about productivity and about how we need to improve productivity here in the UK.
Absolutely.
How are we going to do that?
Now, one bit of good news that did come out yesterday, which is what we've all been crying out for. I recently did the campaign with London Stock Exchange on financial literacy. So the FT running the story today that at last all school children in England, forget those Scots, the Scots don't need to know about financial literacy, they are going to be taught in schools. It's going to be compulsory for all primary and secondary school pupils in England as part of an overhaul in the curriculum that aims to equip students with the skills needed to navigate the modern world at last.
Finally.
Imagine you had got that education when you were at school, Mini Cooper. Where would you have been now?
Not here. I'm joking.
Primary age children will be taught the fundamentals of money, how to spot fake news, and be educated about climate change as part of that compulsory classes from September 2028. That's right.
Yeah.
Why do it now? Let's wait 3 years to implement something.
Don't get that. Because
I could write a curriculum in 7 minutes on ChatGPT, and they're waiting 3 years.
No, yeah, it's crazy. I mean, it's really good to see, particularly due to the fact that I feel a lot of younger students, when I mean young students, I say 16, 17-year-olds who may be doing A-levels or something like that, don't necessarily know about things like ISAs, like cash ISA, stocks and shares ISA, how if if you save them for the long run, let's say over a period of 7-8 years, and you've got a part-time job, you manage to save a little bit of money, you're always best off, generally speaking, putting it in like an S&P 500 tracker or something like that, rather than just having it
Depends.
in cash.
Historically speaking,
Yes,
at the
over
moment,
8 or 9 years,
yeah,
then that's for sure.
yeah.
Obviously, as an example, IG at the moment pay 4% on rates, right? So in line with the Bank of England rate. Obviously, that depends what happens. I think the next meeting's on the 6th of November.
It's tomorrow.
Yeah, so it's a 28% chance at the moment of a 25 bit cut. But yeah, like I say, it's knowing about ISAs, having ISAs, it's much better than just keeping it in like your bank account. Like I used to just keep it in my NatWest account.
I used to keep it in my piggy bank in my room. There we go. So keep interest rates on hold until after the budget, the Times shadow MPC says. A 5-4 vote to just get us through until there's clarity about the budget. So yeah, Bank of England should wait. As Mini Cooper says, only a 28% cut, 28% chance of a cut.
Yeah.
Now, how did Cable react yesterday to those moves?
Yeah, so, Cable, so GBP USD got down to about 1.3, 1.31 from 1.33 previously. And
lower today, isn't it? It's now at 13022.
Ooh.
So look at that, Rachel. What are you doing?
Yeah, not good. But then, to be fair, yesterday it was around like midday. The MSCI Europe index was down as well. So it wasn't just the UK.
Yeah, it's dollar strength rather than
yeah.
So yeah, that's tricky. 130. Oh my goodness, where are we going to be by the end of the month?
Going to be expensive when we go into the US.
Lee JS asking, are we allowed to discuss that hat? You discuss the hat as much as you want, Lee. This wasn't under any duress.
No.
Mini Cooper rocked up this morning, saw it. We have it out on the desk there as a tribute to Soz, and you decided that it was going to be the
I think it looks pretty cool.
Yeah.
I'll have to get you one for next time.
Well, there's actually one on top of that camera there. Okay, so forget a break. Why have a break when we've got Mini Cooper back?
We don't need a break.
Eh? Come on. For all those of you that make a cup of tea before the market open on our break, go and make your cup of tea. But we're going to stick around.
So much to talk about.
There is. Marks and Spencers, please.
Yeah, so we've got M&S. That, of course, would be out in 3 minutes, assuming it's not an extended auction. But they are reporting
Interim C recovery from cyber attack and H2 PBT at least in line with last year, with home online sales back to growth. So that's had a decent run to get up to £4, and that is expected to open unchanged. As is Barrett Redrow. Nothing really to get your teeth into there, just a trading update. And then Weir Group are looking up 2% on the back of Q3 trading update, seeing orders up 2%. Anything else for us, Minnie?
I was going to talk about M&S for a bit, but do you want me to do that when we actually get the numbers out?
You got 45 seconds. You go for your life.
45 seconds, let's go. Yeah, so I did a bit of research before, of course, and on M&S, like you just mentioned there, obviously there was a cyber attack, right? This was back in around April, May time, and of course that did hit M&S quite heavily because a lot of their sales of course they do have shops in store, and a lot of people do shop in store, but of course a large portion of revenue does come from online. And I'm just reading here that the orders online were put on pause from late April, and then they were only back to normal in July. So of course that is quite a long time. And then in addition to that, customer data was stolen, which of course isn't great.
So London Guide on chat is putting 2 and 2 together, and he thinks you've been off to Turkey to get your hair done. That's why you've got a hat on.
Do you think my teeth as well?
That's why we have it, and your teeth as well. That's two for the price of one.
You know what? I'm going to have to take my hat off now.
No. Oh, well, Oh, that does. It still looks like you've been to Turkey, mate. Let's be honest. Right, let's get your bell in your hand then, sir, because we've got 15 seconds.
Which bell am I using, Rich?
Well, we can. So you haven't used the.
No. I might use both actually.
We're now sponsored by the London Stock Exchange for their bell. They gifted us the
Use
bell.
that one then.
And I'll take the Bull Marché one because I've got to say the Bull's not dead in the FTSE. 3, 2, 1, and opening. The UK stock market
Here we go.
at the London Stock Exchange with today, the 5th of November. Let's hope there's no explosions in Westminster to rock the party with those announcements from Reeves yesterday. But we see Marks and Spencer's actually up 1.2%.
There we go.
On the back of their numbers there. So £3.90. They did touch £4 last week. They've dropped back on recent weakness in UK retail.
We've got Trainline on call to close there. I remember looking on the LSEG website this morning, and there was some data coming out on that.
Okay, right.
Although I see it's just gone now.
Scottish Mortgage Trust, that's down 1.4%, mirroring the Nasdaq losses overnight. Burberry down 2%, so more weakness in luxury. We'll check the European names in a minute. Diageo, there's an article in them on the Times today, but currently trading down 1.1%. What else are you seeing
We've got
there?
the banks down as well. We've got Barclays down 0.81%. We've got HSBC down 0.6%. We've got NatWest down 0.48%.
Right, so the banks getting it this morning as well. Weakness in the banking sector. Let's see who your winners of the day are. Oh, it's in those retail names. So Tesco.
There we go. We've got Tesco up 0.89%. We've got M&S up 0.73% there.
But yeah, there's not too many winners around, is there?
No.
There is not too many winners around.
Do you reckon that maybe just market sentiment in general? Or
I think so. The futures broadly across globally. If we have a quick look at the Asian moves overnight, you'll see why you're seeing a lot of weakness in the FTSE this morning. Japan down 2.5%. It has been worse. It was down as much as 4% overnight.
Yeah.
And then Hong Kong. Small down with China, small higher. So now that we jumped from UK to Asia, let's come back to Europe. ASML down 4% this morning. You also had numbers from Supermicro. Supermicro stock down 9% after hours. So that's weighing on ASML down 4%. And then you get those luxury names. Puma. You go through some more of it, and then we'll talk about Puma.
Yeah, it looks like we've got a little bit more vol here than what we got in the UK session so far. Of course, we've got Louis Vuitton there down 2.45%. Herring down 2.05%. Like Rich just mentioned, we've got Puma, which we'll talk about in a sec. That's down 1.92%. Got Renault down 1.19%. We've got another luxury brand, Hermes, down 1.2%.
Any winners at all, Minnie? Let's see.
I think with these luxury brands such as Louis Vuitton and Hermes, in difficult times, generally speaking, they don't do that well.
It's a flight to safety. So you're seeing Deutsche Telekom higher, Heineken, Nestle, Eon, Danone. So they are all defensive there. Almost the only stocks up in the day. Going back to Puma, IR, I saw your question this morning. Please talk about Puma. That has been a rubbish one for me. If we go back to my current portfolio, you can see I've still got it holding out for a potential bid at some point. But yeah, 7,000 euros of stock, and it's cost me 700 euros. So down 10% on that one. That has been painful. Still got it. I don't have many longs in my portfolio.
I know you are very bearish, Rich. We always talk about on desk, actually.
Oh, do you?
Yeah.
Oh, I'm glad that you've got plenty to talk about on the desk.
Talk about you all day.
And yeah, so those calls have paid well overnight. I have got the futures that I bought there this morning. God, it's nice to wake up and have a 1:30 in the morning and taking a bit of money from there. Now, Whitbread. Whitbread I've been getting carted on as well. So if you remember, Whitbread had numbers, they were trading at £31.
Okay.
Then the stock dropped down to 28.50.
Yeah.
They went more aggressive on the buyback, was what we were hearing. The stock got back up to £30.50.
Yeah.
Then it went ex-dividend, and it is absolutely collapsed. So back down now to £28. So it's almost like you're, is it a second chance Sunday to get in on the Premier Inns? Oh, that reminds me, I saw Jacob Rees-Mogg yesterday.
Oh, really? Where?
It was outside a Premier Inn. He was not going into the Premier Inn.
I was going to say.
He was looking very smart.
He always does, doesn't he?
Yes. And it was Putney. I was going to cross Putney Bridge to get my neck cracked, to go to the chiropractor.
Right, okay. I was thinking.
And back cracked and all that stuff.
Okay, yeah.
And suddenly he's walking past, he's got a poppy on.
Yeah, that's nice. Yeah.
I said, "Good afternoon, sir." And he went, "Oh, good afternoon."
Oh, really?
Yeah.
Oh,
That was nice.
you got a selfie?
Yeah.
That was a no.
But wait, Brett, I don't know what to do here. Look at this. So absolute thumped, then the big rally back, but it's really had a sell-off.
Was the only reason why the share price went up because, well, not the only reason, part was the buyback, or
Well, that's certainly what gave it that support there.
yeah.
But there was a feeling around that it had been overdone. I'm going to double up in this. Remind me what size I bought the first time. I don't think it was too big. It was 500 shares. So we're going to buy another 500 shares here to give me a total of 1,000 shares with an average of £28.50. So we'll have that. I think it's almost time for. Just on one more thing. We talked about Puma.
yeah,
Right. It's not Puma only them. Right. They obviously had crap numbers. The stock came down. Nike is also now at 61.30. I know we had somebody on the show ask about them yesterday as well. Exactly the same. These consumer names are getting thumped. It's as if there's just a massive basket of all consumer discretionary, and it is just getting hit every single day.
Out of interest, is this just like in the Western world? What about like in Asia and things like that? Is it the same story there, or?
In consumer discretionary, I'm trying to think of what, Nintendo? Would that be consumer discretionary? Should we have a look at Nintendo? I think they might have had numbers recently. No, they just had good numbers actually. So they are, up 6%.
Out of interest, where are we with Adidas at the moment?
Yeah, so Adidas is the same. That has been thumped as well. Look at that. Exactly the same, right? So it's all one trade in these things. If we look at Deckers, you'll get the same thing. If we look at On Holding, exactly the same thing, right? They're all the same charts.
Yeah.
So for that, I topped up a little bit more on Nike yesterday. Lee JS asking us on Nike as well.
I know you love Nike because they're, well, not new. When did they get a new CEO? Is it like Elliot Hill?
Elliot Hill, exactly. So he's now been in for, is it coming up for a year? No, we got rid of the old one. No, it's not. He reported 2 sets of numbers, so it must be about 9 months.
Okay.
And, I think the story's changing at Nike, but, the market's given you an opportunity.
I was actually reading on social media the other day. I think it must have been Instagram about how like the Nike Air Force One is like going out of fashion. I was like, what? Because that's always been like a fashion.
How dare they?
Always been like a fashionable shoe, right?
Fashion.
Exactly.
How can that go out of fashion? It's a classic. Jeez.
Rich, don't throw it on the floor like that. Come on.
Right,
we've got to pick your shoe up now.
We've got to let Anjan to have a chat.
You can't treat an Air Force like that.
Yeah, it's true. It goes with your hat as well.
No, I can't put on your shoes. What size feet you got?
10 and a half.
Too big for me.
On that note, I'll be back with Piers in about 20 minutes and go to guess the chart. What country are we in? It's the US. What's he going to have? What's your guess? Read Phil's mind.
Something in the US.
It's probably reported.
I'll just go with tech. I'll go with Qualcomm. because they are reporting later today.
No. Right, we'll leave you to it. We've got a clue from, it's like countdown now, isn't it? We've got a clue for the Guess the Chart. It is, this stock is full of energy.
With a wink and a cue, Dom's in control with the perfect view. Axel's got fire, Pierce got the spin, the market hums and the lights rush in. We got the crowd, the stream, the spark, that magic glow before it starts. It's not advice, it's just the tune that keeps us moving past the moon. Every beat, every start, something stirs within the heart. The world turns gold and we can't deny. We shine beneath the morning sky. We're dancing through the morning rain, feeling that joy again. The rhythm moves, the crowd will sway. We're chasing the sun today. Oh, we're guessing the chart. We're playing our part. It's a brand new day. Hands up high, we testify. No dream too small to try. When the bell rings out and the beat gets high, we rise with trade live with IG. Oh my, we're dancing through the morning rain, feeling that joy again. The rhythm moves, the crowd will sway. We're chasing the sun today. Oh, we're guessing the chart. We're playing our part. It's a brand new day. Trade line with IG. Trade line with IG. Trade line with IG. Trade line IG. It's a brand new day.
We're talking.
Hey, trading friends, welcome to the show. And what an amazing morning start. I was watching outside.
I could hear you.
Oh, you
And see you in the comments.
So much for the IG, soundproof glass here. Loads happening. The question is, have we got a winner for Guess the Chart? Wow, Pilates, well done you. We were trying to guess outside, but I would not have got Monster
I
Beverage.
would never have guessed that, no.
Did you manage to even come close?
No.
Interesting. Talking about that, look at that chart, parabolic, one that is like that today. Choo choo. Train line. Let's have a look at that.
Let's have a look at train line.
Up 10% there. Look at
Yeah,
that
good.
strong candle. Showing you the minute chart as well, just to give you a sense of that gap up, as you can see there.
Yeah.
Big news from Trainline, one that I've been watching earlier, because Trainline, of course, was indicated higher. And then we also had it closed for a bit until it uncrossed.
Yeah, so typically with that, the LSE stock, go into an extended auction when there is a little bit more volatility. As a result of that, when me and Rich were talking, and at 8:01, 8:02, you would have seen the orange call button, right? It wouldn't have been green.
Yeah.
And therefore, you wouldn't have been able to place a trade because it was in an auction.
It was so much higher than indications. It was indicated some 2% higher. Bottom line there, interims saw strong operating performance. Revenues up some 2%. And the adjusted EBITDA up 14% as well. Another big mover, I have to say, do you ever go to JD Wetherspoons? Are you that kind of guy?
Sometimes. I used to more when I was younger. It was good drinks.
Booze, don't they?
Yeah, exactly. And a decent breakfast as well. The only thing I didn't like was I didn't feel like the sausages had enough pork content in it.
It probably has no pork content.
Oh, don't say that. Bloody hell.
Sounds like a pork. JD Wetherspoon is moving down 3.5% there. Looks like they're not convinced about the pork sausages as well. The move there attributed to its cautious outlook ahead of Rachel Reeves' budget statement, which is not long now, 26.
Yeah.
Yeah. So taking a look at the list there, Ceres Power, Doyle 45. We can indeed look at Ceres Power for you. Ceres Power, thank you very much. Up more than 4% there. Ceres, one that was in my filter list this morning.
Look at that price chart.
I know, right? It's a thing of beauty there. This is because Weichai has signed a manufacturing license for SOFC Power. Speaking of JDs, another JD that is up.
JD. Let's get the JD price chart up. And out of interest, what's the client sentiment on JD at the moment?
JD Sports. Let's have a look. It's down 0.75%. Now, I know quite a few of our clients have positions on this.
Yeah, because JD is like a big name on the UK high street. I certainly know when I was a lot younger, I used to buy a lot of my sportswear from there.
A lot of analysts as well, back in the day, used to go into JD's here to have a look at what the pyramids were telling you. You know those pyramids of boxes?
Oh, yes,
Yeah,
yes. When you said pyramids, I was thinking, what are you talking about?
Well, there used to be pyramids when it used to be a pile. Now they stack them in boxes.
Yes, yeah, exactly, yeah.
And so taking a look at JD, it used to be that if you had piles and piles of those boxes, and depending on what brands they were, those were the brands that you would short, that you're looking into. You wanted to go long.
No one wants them.
Yeah, you want to go long the ones that are in the shop window.
Yeah. Or on the shelves.
Or on the shelves, yeah. But shop windows, especially when it's on a pedestal. JD Sports, they're down 0.2%, actually a bit more now, almost 1% there. Having a look at that for you. Checking on to the longer time frame, let's have a look at the weekly chart for you. You can see how far that's come. And we have talked quite a bit about consumer brands and how that's been hit recently.
Yeah.
I mean, friends, you've heard Julian Wheeler from Shard Capital yesterday talking about how in this brand new world, many companies that have relied on their brands in the past have been whacked as we have a changing, more diverse consumer space now. Speaking of which, Metro, have you ever used Metro?
I haven't used Metro, no. What about yourself?
Here we are. Let's have a look at Metro.
Metro Bank PLC.
Yeah, it is up 6.8%, friends. One of the biggest movers.
Not bad.
Today. Not bad indeed, but it has come from a place. It's taken a while to climb up to those levels that we're seeing right now, because don't forget, it was not too long ago when it was around that 76 mark. Metro, for those of you that remember, and your memory goes back as far as mine, they launched a great fanfare when they launched, and they had this gimmick where they were giving away free dog biscuits. Do you remember that?
Free dog biscuits?
At their new branches. Their whole mantra was like, once everyone's closing branches, we're opening.
Yeah.
We're opening.
Right, okay, and that was
come
like, come to me sort of thing, yeah.
Exactly. Metro Q3 trading update there. Metro that's saying it sees continued growth and reaffirming its full year guidance. For those of you that have a position in Metro, well done you. Another one that's on the move, TP ICAP. TPI kept just checking on that for you, is down 2.6% there. Home builders, many of your clients like home builders?
Yeah, quite a few trade home builders, yeah.
Let's have a look at Barrett.
Let's have a look at Barrett Redrow.
There we are. It keeps changing its name. I've got to a point now where I'm just calling it Barrett. I'm taking a stand, friend. Just talking about Barrett. So Barrett is down 1.5%. Do you know many people who have, exposure to Barrett or have had a Barrett
We would be able to see
home?
on the client sentiment with respect to client positions.
84% long there.
And that is between, if you know I've got bad eyesight, between 51 to 250 IG clients. So that's a fair few clients, to be fair. Because how this basically works is the absolute max it will show. Let's say for like one of our most popular markets, such as the NASDAQ, it just shows 500 plus clients with open positions in this market. So for an equity, I say, particularly UK one, as they're not as popular as the US, is pretty decent.
Let's have a quick look for Monkey Man. I think it is Monkey Man, isn't it? GM, let's have a look. Here we are. Take it you're talking about GameStop and not General Motors. No, General Motors. Here we are. And General Motors, of course, now offered on the extended hours on the platform. Look at that huge move there.
I was going to say, because it's extended hours, and basically what that means is you'll see live pricing and pre-market in, 39 minutes from 9 o'clock. Obviously, last week that was different. That was just for the week because of the hour changes. But on the weekend, the hour changed in the US. So now it's back to normal. Yeah. Whereas you've got the 24 hours there, which is like for those much more liquid stocks such as Tesla, Nvidia, which is 24/5 trading. Whereas the extended hours is the same as our all sessions offering previously.
Nice, nice, nice. And General Motors, one that I am looking at very, very closely.
Yeah, I remember that got absolutely hammered with Trump's tariffs. I think that was one which got hammered the most. Yeah,
let's give our trader friends a reminder there of what happened in the April tariff tantrum. But it has started moving back higher there. That's a weekly chart. Let's go to the daily. That might be an easier way for you to have a look at what we're talking about here. And there you have it. It's really, really come back now. But be aware that, we could see further volatility ahead. We are waiting on news, of course. Tesla, Toyota, Ford, all of those car makers, I'm sure Ford as well, and GM as well, have urged Trump to extend a North American free trade deal that they say is absolutely key to American.
I think General Motors back with all the tariffs, they were the most exposed, along with Ford pretty close after, because I know a lot of their production is in Mexico.
Yeah. Let's take a look at something that glistens, or to use shines. For our Sachs, welcome to the show. Thank you so much for that wonderful, warm welcome when I came back from holiday. This is also for IR as well, that asks for gold. We're looking at gold here, consolidating at that 3,980 mark there. This, I feel, is telling us more about this move here, telling us more about consolidation than panic. What's your view?
I mean, it's interesting with gold. Obviously, last week, it must have been, I can't remember the exact day, I think it was earlier on in the week where we saw it was gold drop 5% in a day and then silver drop 7%. I mean, I personally don't think, I know, because
I was biting on a stick on my holiday. I was, my husband had to say, please stop checking because it's causing you to. Well, but I stayed and I held. I still have my gold miners.
On that day, I have a gold ETF in my ISA, right? So I just bought a little bit more because it's just like a long-term thing. So I hold it for like years and years and years.
Yeah, me too.
So it's not trading when you've got like funding costs and things like that. So I thought that was a good opportunity because I necessarily don't think gold is just going to drop like 20% from here and get down to like 3,200 or anything like that.
Yeah, I think this is a consolidation. Also, pay attention to the kind of huge climb. We often say that, stocks can't grow into trees and trees don't grow into the sky, right?
Yeah.
So there's bound to be.
The thing is with gold though, like you would have read recently how loads of central banks are just buying in, which of course, in addition to the retail buyers, is, you know, when you've got loads of people buying, it is good for the price.
What is interesting is that when you look at also the ETFs and you take a look at FX traders, and what they're saying is, well, that it looks like it's pointing towards profit taking and not short selling. So there is a key difference there.
Yeah,
because
of course.
you're taking some profit, but it's not a run everyone to the exit
Yeah.
crush situation. RSX saying, I remember you mentioning live that you stopped dollar cost averaging on gold. Have you started? That's a great question, because as you also heard on the show, before I went on holiday, I de-risked because I didn't want to be checking in the middle of the rainforest where there's no Wi-Fi. So I am starting to look at dollar averaging in as well, because like Mini Cooper, gold for me is a long-term
Yeah, it's a long-term thing. Yeah.
play. It's not a short term. This is an investment, people, not a trade. Right, away from numbers, we are. Producer Phil, my goodness, look at the time.
Time flies when you're having fun, Anne.
Time does fly when having fun. Right, let's have a quick look at Pensana. Who is this for, Producer Phil? Funky Gibbon, good morning to you. We have Pensana, we've got only 90 seconds. You into rare earths? This...
I'm not myself, no. What about you?
I have, I love miners, as you know, and that's why one of my best mates is John Mayer, who I bring onto the show. And also I go on holiday to try and look at rare earths processing facilities. I know, tells you a lot about my life.
Yeah.
A bit boring, but you know, hey, boring is sexy, people. Pensana, what a move lower. Now, you heard me say this over and over again. Rare earths very much tied to the mood music around Trump and Xi. When Trump, the yellow man, followed me into KL airport, stalker, he did arrive in Malaysia several days after me. I fled to rainforest.
Is it yellow man or orange man?
Well, orange, yellow, orange.
Both.
Yeah, both. He then went off to China, right? After that. The thing is, the mood music, even though they weren't looking at each other, and I watched the video if you want to have a look at their body language, but they did come off having sort of warmer mood music. So that could be in part why companies like Pensana are heading lower from a technical viewpoint. This is starting to edge past the 100 EMA, and to me this looks like if we punch below that, then we could see price action move towards lower, towards the 200 EMA mark. So to me this looks like sellers are still in control. Do be aware though that Pensana is in advanced talks with Exim for $160 million in debt funding as well. This is for the Longonjo rare earth mine. Perhaps you might want to have a closer look. If you like gold, then maybe you like that as well.
Yeah.
All right. Thank you very much. We'll be back with Angie's Espresso later on, but we have Piers Buckworth first to talk about what's happening with AI and all things tech.
Do you like the sound of tax-free trading? Well, that's exactly what spread betting enables you to do. This tax-free way of trading lets you speculate on the price of over 17,000 financial instruments, like shares, indices, forex, and commodities, without actually owning them. With spread betting, you can benefit from both rising and falling prices, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going down, then you can sell short. Not only is spread betting exempt from capital gains tax, but it's also commission free. All you pay is the spread. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves. Welcome to the Art of Investing, a brand new podcast to help you achieve your investing goals. Join me, Rich McDonald, and my co-hosts, Mark Spice Holden and Chris CJ Fellingham, every Friday when we bring you updates from the markets and insights from our combined 100 years of investing experience. If you're looking for flexible ways to trade financial markets, whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares, indices, forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades, but also remember your losses are also amplified. So be sure to manage your risk. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade CFDs with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Hello, I'm Axel Rudolph, Senior Technical Analyst at IG and Fellow of the Society of Technical Analysts with over 30 years experience in trading the financial markets. I've been following cryptocurrencies from the very beginning, and with IG's new crypto offering, I can finally share my technical analysis expertise on crypto with you. So join me every Wednesday morning for my new show, Charting Crypto, where I'll be answering your technical analysis questions on all things crypto, live on Trade Live with IG.
Welcome back, everybody. Yes, he's made it to the studio this week. It's Piers Buckworth of Apex Alpha Trading.
Sorry about last week, mate, but
What happened?
I'm back. Train issues. You know how it is.
The grin on the face tells a whole different story. I don't think we'll ever get to the bottom of what happened last week, but let's focus on this week because there are things happening live in the market as we speak. Novo Nordisk reported numbers, and they opened down 5%.
5% down for about 12 minutes. And then I haven't looked at the latest print. Let's get that up. Where are we?
Yeah, well, shall we have a look at the ADRs for me as well? So
Yeah, no,
that's-
that's what I'm talking about. Look
Yeah.
at the NVO, which is the ADR. Where's that trading? So it's just off the highs. So what's that? 95 basis points up.
Yeah,
it was
but-
down 5 on the low.
So literally the rally from 8:05.
Yeah, it was just when I left the desk.
Yeah.
I checked it when I was on my Lime bike on the way here, and it was minus 4.8 when I left, and it was plus 97. Anyway, it is beautiful because this is a moment. I love these moments. It's a kitchen sink moment for a high quality company. Look at the numbers that came out today. Now, I usually get interested in these scenarios. I'm addicted to these scenarios, if I'm honest with you, with high quality companies that have had a few quarters of guidance downgrades, and then
Yeah.
the market's got it wrong. ASML was the most recent one, right? They only did 2 quarters of bad guidance. But you look what happened to ASML. The CEO said downgrading guidance, got no visibility on 2026. And then 2 months later, the stock's 40% higher. Novo have got their free cash flow went up by, I think it was 20%. Big free cash flow number for them. They've got a lot of cash. They've been cutting costs dramatically, trying to get this ship steady because obviously it's under a lot of pressure on the top line. Wegovy sales were slightly lower. The guidance is +8 to +11 versus +8 to +13, +14 rather. So at the high end of the guidance, it was a miss by 3%.
Yeah.
But you take it, look, just take a snapshot of the picture. Wegovy sales, the guidance has now been downgraded 3 times in a row. Very much priced into the stock. The balance sheet is rock solid, otherwise they wouldn't be making a ridiculously aggressive bid for Metsera.
Yeah.
The cash flow situation is fantastic. They're 12 times forward earnings, and they are about to do a deal with Hims to grow Wegovy sales in America, which is actually it's quite shocking based on what they said the other day. But it's a really interesting scenario. So you throw that all into the basket, and I see a company that is massively undervalued and on its knees, and it might chop around today over the next few days. There's obviously a lot of battle going on. The analyst community have to have their say. But for me, this is an opportunity, a rare opportunity to buy a high quality company at this price.
Yeah, and this is it, right? We hear again and again that warnings come in threes, and the warning you watch out for is the one where the stock ends up on the day. So if this gives us ticks all the boxes.
If by the year it was the Americans are very active in this stock, right? It's because it's obviously got a lot. They have a big U.S. presence. They're obviously Ozempic is obviously the blockbuster drug made by Novo Nordisk, made the company of Norway essentially famous in America, and propped up the economy. So the ADR is very liquid. They're involved in a fight with Metsera and Pfizer. They're a very, very, very American stock, right? Everyone knows this stock. So let's see where it closes the day.
So let's run through this potential bid for Metsera, because Pfizer need to buy it.
Pfizer need to buy it, and it's a fight, and there's a legal fight going on. And I don't know. Someone's asking me what's the story with the legal. I don't know the legality of it, but I do know that Pfizer claim that they have a right to this deal, and Novo have now outbid them twice. It's a massive bidding war for this company.
Yeah.
I find it interesting because there are some other options. We've mentioned Viking and we've mentioned Structure Therapeutics, but Metsera is one I haven't done a lot of work on. I've had to play catch up over the last few weeks, but they're bidding over $9 billion for this company, right? And listen. There's a few gold rushes going on in the world. One of them's AI, one of them's potentially quantum, and the other one is diet pills, right?
Yeah.
The leaders are Eli Lilly and Novo Nordisk, and then you've got some smaller Hims, of course, involved in the game, and then there's some smaller players like Metsera, and then some pipeline guys that I mentioned just a second ago. And the bottom line is that it's a high stakes game, right? They need to secure this pipeline. Pfizer tried to do it organically and failed, so they put their flag up and said, we're not going to do this organically anymore. So that's why they went after Metsera. But it's critical. Like yesterday, Pfizer's numbers were quite good, right? They actually beat and raised. They've fixed the regulatory overhang. Everyone knows my view on Pfizer, I would hope. But the market wants...
Just give us a one-liner on...
there's 3 things. Number 1 is the technicals are just incredible. Yeah. Number 2 is the balance sheet, the valuation, the fact that they have the regulatory hurdles behind us, the positioning. That's more than 3 things. But the piece of the puzzle that's missing is GLP-1. And that wasn't missing when we last spoke. because when we last spoke, Novo hadn't come in and bid for Metsera.
Yeah.
So there's a bit of a confusion as to how this is going to play out, and then what happens next. And look at the way Viking trades. Every time you hear a bit of news that there's a battle over Metsera, Viking goes up 5%. Right?
Oh, really?
It closed down yesterday, but it was up like it's a bit of a volatile stock. But it's that gap is going to be closed pretty soon, if you ask me.
Yeah, back towards the range.
Yeah, again, this is one of the most fascinating situations, which I've said many times. But there must be a reason why Novo aren't going after Viking, because they're on the same molecule, and the drug works. It's just about the dropout rate, which is side effects and so forth. So it's stage 3. We need another update, because everything I see, and they updated us the other day, and everything was okay. Plus the numbers were okay.
Ah, right.
Yeah. So
updated on financials or the
financials,
trials?
and said the trial's going ahead, and the stage 3 trial. Stage 3 trials are very serious, right?
Yeah.
That means you've done 2, and you've proven yourself. You don't get to stage 3. The FDA doesn't let you get to stage 3 unless you've jumped over a number of hurdles. So it's a fascinating situation. And I'm actually long Pfizer and Novo, because both of them are high quality companies at a discount, in my view.
It's good. No, it's definitely good to chew the fat on them.
There he is. Yeah.
Right, we're going on to AMD. So results out from AMD last night. Again, Palantir we saw get smashed. We'll go into that shortly. But AMD suffering as well.
Yep. A little bit. I mean, listen, everything needs to be taken into perspective with where AMD is trading at the moment. And bearing in mind it was trading at 80 7 months ago. No one wanted anything to do with it. Now it's trading at 260 going into the print. And everyone's scrambling to upgrade themselves. So what I saw, listen, if you wanted to pick holes in what happened last night, the data center number was a bit light, right? The AI number, the GPU number was above, the top and bottom was above, the guidance was above, but it could have all been perfect and still sold off, because it's not that dissimilar. It's not that dissimilar in terms of the exuberance, although it is obviously. Palantir is a whole different level of exuberance, but AMD is also overcooked, right? It's not a surprise at all that it sells off. It's a relief, and I'd love it to come off some more, because I need to get my hands on some of this.
Well, that's the thing. We want
hold
to
on
buy
to
it. Right,
everyone wants the same thing. Everyone wants this market to sell off, and it might happen, it might not. Listen, the close last night was semi-ugly. Look at these retail names which I've been banging on about for months: OKLO, Rigetti, Poet, you name the ones that every retail person comes and says, what do you think about this stock, this stock, this stock? You can predict exactly the questions you're going to be asked. Every single one of those stocks is being hammered.
And that's because now you are speaking directly to retail through your TikTok, aren't you?
I am, and it's fascinating actually, because you get such an insight to what these people are thinking and doing. And actually, do you know what? On my TikTok, I have obviously been talking about for weeks the need for a sell-off in semiconductors and Palantir and quantum and all these areas. And there's the odd person who just who just wants to be a dick and just chimes in, right? Yeah. But in general, an overwhelming majority of the retail community are completely agree and are kind of positioning for it as well, which is interesting, which does also explains the price action, right? That buy the dip mentality in all these same names is kind of receding a bit, and I can guarantee you that the professionals aren't going to be buying a dip in Rigetti. So,
oh no, what's the level in AMD that we watch?
So anyway, so back to AMD. So listen, it's such a difficult question, Rich, because if this market gets whacked, it's very vulnerable right now, right?
Yeah.
Look at the price. It can just it can collapse in a second. Who knows what that catalyst is going to be? It might not happen, but
we just had an announcement from
we just
China.
had the China thing. Everyone thinks that the China-US scenario is all cozy right now, but it's never cozy, ever. No matter what anyone says, there is a tech war going on between these two countries, and it's high stakes because the Chinese desperately want to be able to make their own chips and power their own data centers, and they're and power their own smartphones, but they're hostage to NVIDIA and to Qualcomm, and no matter what they say, they are still hostage to these companies. They have it looks like they have the technology to get in the game.
Yeah.
Today they've said all existing data center projects can only use domestic chips. It sounds like hot air to me because, quite frankly, from which company, what chips, I don't know about.
Yeah.
But it just goes to show you that and also put that in alongside what happened on what was it, Monday, Tuesday, where Trump's team said to him, "I don't agree with you giving Jensen, your new best friend Jensen Huang, a free pass in China. I think you should stick to what your plan is, which is restricting what chips can be sold to China. So you put this all into the cocktail, and the US-China tech scenario is red hot war, and that's not a surprise. It's been that way for a long time.
Yeah.
So
Which you could tell between, you know, a Trump Xi meeting wasn't like Trump's other meetings on trade deals where it's all happy, jokey, shake hands. Xi said, you know, I'm here to do the deal, and let's do the deal.
Yeah, listen, I don't think there's I mean, Trump can say whatever he wants about how he's got respect for Xi, and he probably has got respect for Xi actually. But you know, this is a really, really serious scenario between these two countries. They both want to win. They both have to win. Whoever wins the tech war basically controls the world, right? Yeah. So, and let's not be under any illusions about how serious that is. Yeah. So whether it's that or whether it's the government shutdown turning into a bigger problem, we're meant to be getting labour market data today from the ADP, and then Friday, who knows whether we're going to get that. We haven't got a clue what the labour market data is. No. Not every, you know, your average TikTok person will come back and say that's irrelevant. It doesn't matter. The Nasdaq only ever goes up, and you go ding. That's an alarm bell.
Let's have a look at the facts behind that. There it is from the April lows. So you can see David Solomon overnight saying, yeah, sure, we expect to see a 10 to 20% correction in the market at some point. We just don't know when it's going to be, right? That's the CEO of Goldman's telling you that a correction is coming.
And also saying he's got no idea when it's coming.
Yeah.
Right? It could be I think he gave it a window of 18 months. So
right.
It's not exactly very helpful.
Nice. Yeah, and it could be from anywhere.
Thanks, mate.
But what about the leverage in the system? Oh,
can I take that call? Actually, really important person calling me, by the way.
Really?
Yeah.
Right, let's go to a break for 1 minute. We'll be back. Get Piers to take the phone call. We'll see you in 1 minute. If you're looking for flexible ways to trade financial markets, whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares, indices, forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades, but also remember your losses are also amplified. So be sure to manage your risk. With us, you're not alone. You're part of a... There you go, live television. Only this man, I would cut a broadcast so we could take a phone call. So we're just about to take a look at the Nasdaq and talk about the leverage in the system, because that is becoming a problem. We've seen it in crypto world in the last 24 hours.
Yeah.
What's going on?
Yeah, so listen, and the leverage in the system is something that I think it's critical for everyone who loves to watch markets and wants to know more about them, needs to understand. You know, I get questions about why is crypto doing this and why is doing that, and it's all the same trade. All of the leverage, which is margin to trading accounts, CFD accounts, whatever it may be, hugely retail heavy, of course, and it's all the same stuff. It doesn't matter whether it's crypto, Bitcoin, it doesn't matter whether it's quantum, all these things, right? Look at yesterday. Yesterday we had Bank of America and Apple, just to pick two high quality companies that are not retail, not crowded. Well, Bank of America might be semi-crowded, but high quality companies that are completely out of the spotlight of the speculative stuff going on in this market. Both of them making all-time highs, not even remotely moving. Apple closed green at an all-time high yesterday, I think, if I'm not wrong. And meanwhile, you're getting a complete hosing of all these areas that have a lot of leverage and speculation in them. Yeah. It's very healthy. Right? If the market's not healthy, Bank of America and Apple will be down for no reason whatsoever. Hard.
So we look at that compared with Rigetti, and you'll see the huge difference there. Where am I? Rigetti.
I've turned the echo off, guys. Sorry.
Yes.
Right, where are we? I'd be fascinated to. We'll talk about Palantir. Is that Rigetti? So I can't see the ticker.
Yeah, that is Rigetti, exactly. So we've come down from 57 euros,
Yeah,
$57
dollars.
down to 35.
Yep.
So that is a bubble bursting, right?
But kind of, yeah. I mean, but it depends on the tape. If the tape continues, it's all about the tape. The stocks are irrelevant. It's just the same trade, right? If we're in risk-off mode, if we're in the current version of risk-off mode, all these stocks, OKLO is another one, right? And I've got a sheet actually of the valuations, and I've got a friend of mine did it for me yesterday. It's got the 12 most talked about tech companies in the world, right? Gross margins, price to sales, price to earnings, and he put red lines through 3 of them in terms of just how ridiculous the valuations are.
Right.
And out of the top, I think it was 15. Tesla, Rigetti, OKLO. Those are the 3.
The top 3.
On all the metrics. Right?
So, and sorry, I'm just showing that it's not just quantum computing.
sorry,
it's also
Palantir.
rare
Sorry, I meant Palantir.
Well, that's where I was. Yeah. So it's not just quantum computing that was the bubble. It was also MP Materials down 50%.
Yeah, well, there we
from its
go.
highs.
And also they had a double whammy because obviously they were benefiting from the war with China.
Yeah.
So, but listen, all these things.
Palantir.
These things can bounce, but they can also continue lower. This is the thing. They don't have any revenue. There's nothing. It's a zero. Right, Palantir has revenue,
Yes.
but not enough. And it's going to be fascinating to see how this plays out. Listen, I have been wrong on this stock. I'm the first one to put my hands up and say that. I gave up the fight about however many weeks ago it
About
was.
3 weeks ago, yeah.
3 weeks ago, I gave up the fight, and then I put it back on again before the earnings. So I feel somewhat vindicated, but I'm still offside if you add it all up over the last 3 or 4 months. But at least now the market is kind of coming over to my side of the thinking. Michael Burry got a lot of headlines. No surprises there that he's got a huge put position. The guy's a perma bear, but his argument's somewhat valid. It's pretty ballsy what he's doing, but that got a lot of airtime. And then just the analyst community, right? The argument about this stock. I watched the CNBC, the post-earnings debate on CNBC. They had 2 bulls and 2 bears having an argument with each other. And the best argument that the bulls come up with was that the US government are going to take a stake in them. I was like, are you
That's
serious?
the argument.
Is that the argument? Are you serious? Like, first of all, if they take a stake in them, who cares? They took a stake in Intel, and the Intel rallied and then collapsed. The only reason why they went up again is because Nvidia and SoftBank took a stake in them. Nothing to do with the American.
And plus, they needed the cash. This thing is flown off free cash flow, right?
Correct.
Now, Dan Ives' argument was that this thing could throw off $8 billion of free cash flow by 2027, right? Currently, 2.
Yep.
It makes about 2 billion.
Yep.
Well, it doesn't matter because the market cap is 400. So if you put the 8, you're talking about a free cash flow yield below that of a Microsoft or a Meta. Right, and we know that Meta's free cash flow yield has been dropping anyway because, of course, they're ramping up the capex. So this dream of 2027 that
that's fine. Okay, that's one. That's a nice little argument to make. But what about he refuses to? Well, no one asks him, which frustrates the hell out of me. Why can't someone ask him? At what point are the sales? Or the top and bottom line. Sorry, I always go about price to sales. Let's deal with the 420 price to earnings ratio, right? At what point is the top and the bottom line going to justify where it's trading? At what point? And it's going to be at least triple digits growth on both lines. Yeah. When is that happening and how is that happening? RBC, who are the Lone Ranger down at 45, right? His argument, and by the way, everyone knows that's where it should be trading. Everyone.
Yeah.
I reckon when you have a chat in a dark corner with Dan Ives, he'd tell you that too. Right?
Yes.
But the question is
that where you were last Wednesday?
Yeah, exactly. Gosh, you'd be able to see him, wouldn't you, with those shirts on?
Yeah.
But the point is that when is this going to happen? Because like they can get around. And yesterday, Morgan Stanley and Truist, I always mispronounce that broker, upgraded after the earnings, upgraded by $19 or $22. The best they could come up with was 195 and 205 or whatever it is. But I read the report, and like at no point in the report did it say how they're justifying that number.
No.
0. Like you have to say, at this point in time, this is going to happen, and therefore the sales are going to go to here.
Exactly.
Or they'll have a
Yeah,
chat
I believe
GPT.
there's an explosion of contracts in 2020.
Chat GPT will happen, and your earnings will go up 400% overnight. Your name is Nvidia, and therefore you're cheap. When's that happening? I can't, and no one can answer that question. So until someone can answer that question,
It's on Palantir. It's a beware of buying the dip. Is our strong message.
Well,
beware, because 186 is still. You need 63%.
Beware of sell the rally too. This stock is dangerous.
63% revenue growth for the next 3 years brings you down to 25 times sales, right?
Yep.
That's what you need. The predictions are 34%, not 63% revenue growth. So it is still a be careful. However, is Meta a buy?
Well,
the dip we're getting
Meta.
at?
Someone just asked me about Meta. Should we talk about Meta quickly?
Yeah,
I actually did a TikTok video on this yesterday. Listen, can I just put to bed some misunderstandings about this company, and let's make something crystal clear.
Okay.
In 2022, yes, all of the tech universe sold off because of the inflation and macro environment. We all know that. But Meta gapped down 22% on their earnings, and the reason why they did that is because on the conference call, Zuckerberg said we're spending $15 billion next quarter on the metaverse.
Yes.
And everyone went, no thanks, we don't like that idea. Goodbye.
$98.
And they went all the way down to $90 on the low. In a bad market, sure, but they literally destroyed the value of the company. Goodbye. It's happened
I was
before.
in Medellin when that happened. I remember listening to the
That sounds a
podcast
lot of fun,
discussion on it.
So this is different but similar, and what I mean by that is there's a lot going on, right? We had they issued a bond, they took a big tax hit one off. The numbers were good, but they did the capex at the same time. So you can spin this story however you want, but one thing you cannot deny, and the professional world are talking about, is that Meta have lost control of their capex again and lost control of the narrative again, and they keep randomly hiring people, and it's quite frantic what they're doing. It's what typical to Zuckerberg. And every now and then the market loses faith in him and what they're doing and hammers them, and there's no bid for this company. But my point is it's trading at a 23 RSI, and from a technical perspective, let me be very clear, a short-term bounce technical perspective only, it is very much. In fact, is this the chart? Is this it right now?
This is the chart
It's
right now.
still red.
But
Where
can I
is
just say, Piers Buckworth, I watched your TikTok last night and I saw your 24 RSI that you went out on yesterday.
Yeah.
And that's what that little white dot is there.
No,
How about that for a purchase at $617? That's me. So thank you very much. That's my entry.
That's awesome, mate. What a level.
Only 30 shares.
Hang on a sec. Can I just check something? What is that? Is that minus 16 basis points? Is that what it says?
That is what it is today. Yeah. From 9 p.m. last night.
Yeah, no, because I was just checking. It was up 50 basis points when I left it.
Right.
Look, listen. So the answer to the question, anyone who wants to know what I think about Meta, this company is under a lot of pressure. If zoom out on the chart, anyone who thinks there's been a dip in this stock, it's just nothing. This stock is up 400%. What is it? 500% or something? So it's up an enormous amount.
Zoom out
right?
on that.
Yes, it can keep going lower. Yes, the technicals on it are shocking. It could easily go to 500, right? But my point is that from an RSI point of view, and I do like trading extreme RSI when it gets really extreme. 85 and 25 are my numbers, right? There will be a short-term tradable bounce in this stock, but that's all I have to say about it.
Right. AppLovin
numbers are tonight. I need to double check that, sorry.
Yeah, just incidentally, if you are watching on TikTok, we're live on Trade Live with IG on YouTube. So come to YouTube, Trade Live with IG. If you're a first-time viewer, Piers comes every Wednesday when he makes it in from the trains.
Every now and then.
And so if you subscribe, then you'll see more of him, and you'll see also the videos as well. So subscribe to the channel Trade Live with IG on YouTube. AppLovin tonight. What do you think?
Is it tonight? Trying to get
sorry,
that
right.
information right. Yeah, I mean, listen, I don't really have a strong view on it, to be honest with you guys. This is a battleground stock, although it's part of the PARC acronym. For those of you who don't know what everyone knows what Mag 7 is and FANG used to be. This PARC is Palantir, AppLovin, what did I say? PARC, Coinbase, and Robinhood, of course. Sorry.
Yeah.
So those are the 4 most actively sort of semi-large cap liquid retail stocks. Not just retail. AppLovin's a hedge fund hotel. There's loads of hedge funds that love this stock. Listen, they're an exciting company. They're growing fast. They're right in a sweet spot of AI advertising, and which is obviously a big growth market. They're a good company.
But no strong feel.
I don't have a strong view.
Right, let's move on to Robinhood then, because we're running out of time here. I want to get through as many as possible.
Robinhood, again, I don't have a strong feel. Robinhood, for me, trades is a very... can you bring up the chart quickly?
It's interesting.
Listen, this is a crypto stock at the end of the day, right? Although not quite as crypto as it should be. But
it actually trades incredibly in line with Palantir.
Yeah,
on a percentage.
Well, there we go. And they're in the same... They're in that acronym basket I just gave you, right?
Yeah.
And all these stocks, it's so robotic, the way that these stocks work. They're all part of the same buy program, just the way all the other ones were. So what do I think about Robinhood? They're a great company, right? They've surprised a lot of people since the IPO. When they IPO'd, everyone was like, how are they going to make any money? This is a bit of a joke. Ultimately, it's going to be a meme stock. Yeah. And Vlad has basically gone from that moment to now being a regular on CNBC. He's a smart guy. People respect him. He's got a banking license. He's got margins kicking in. He's got growth kicking in. He's obviously got a huge amount of volume. He's got the crypto angle to it as well. And he makes money on the buy and the sell. Yeah. So it's a great company. It's expensive. It's part of the cohort that I just mentioned of the 4. And I need none of those 4 I want to be buying right now. Because it's just my nature. I will. If I see Robinhood hammered at some point, I'll go, okay, maybe I'll get some of that now. But that's just me.
Yeah, no, I agree. Yeah. I'm short the 180 calls, and they are 160 calls. Sorry, they're paying nicely so far. Okay, so just your thinking at the moment is Novo's interests you, especially after this morning. Pfizer is just your plain and simple. That's your
Pfizer's also
pension kind of stock.
It is as well, and also it's also just such a relaxing stock to hold on to in a bad market. I hope. Let's see what happens to it today.
Yeah. We'll take a really quick check on the all sessions, of course, because all sessions gives us exactly.
Well, there we go. Thank God. Right, Palantir down 1. Is that down 1.5? 1.9. Beautiful.
Yeah,
I think this is my point. This can. It was a big technical level that Palantir fought with yesterday, and it's gone through it now. And listen, this stock needs to be slaughtered just once. Okay, it's fine. It can come back, but it's.
So I put it on a 50% increase in revenues, right, for the next 3 years.
Okay.
Right, and then brought
that's
that
fair.
back.
But that's fair.
That's it's the right price.
That's right. Yeah.
And it's 20, and then put it on 25 times sales in 3 years' time. So that is making it in line with where Snowflake is today, right? Multiples in 3 years' time should be much lower.
That's its closest comp, yep.
That's its closest comp. And it gives you a price of $141 is where it should be trading today. That is where Goldman Sachs are with their target price.
Well, there we go. And that's the number. And by the way, the market is very irrational in the short term. In the long term, it will end up there if that's the number, right? That's something that at least, the irrationality of markets lasts so much longer than it should do. And it can become so ridiculous that you get lost and think it's never going to change. But if you look back on this company in 10 years' time, if it hasn't delivered, it will be trading where it should be trading. That's just a fact.
Agreed. Last one to check, Uber.
Great one to finish on. What a great company. I think you'd be hard pushed to find a company that's got 20% revenue growth and trading on 15 times forward earnings at this market cap anywhere in the world. So it was a classic. This earnings season is all about selling the news, right? Even if it's good news. And that's because that's the stage of the market we're at. It's healthy. I don't know why people even ask questions. I mean, look at the chart, look at the stock. It's not exactly, it's a bit of a choppy company. Again, I put this in the same basket as Robinhood. When it started, everyone was like, how are they going to make any money? How are they going to be good? Yeah. Fast forward now, they're a highly profitable company, a cheap company, quite crowded to a degree, but I've never owned it before. I've got my attention elsewhere, but it's a high quality company, and it's cheap.
And you've just discovered Line Bikes recently.
And I have discovered Line Bikes, which I think are really helpful. So yeah.
Good stuff. Right, we're looking forward to Nvidia earnings on the 19th.
Yes,
that's the next big catalyst.
That's the big one, and yeah, that's going to be interesting. Listen, it's going to be depending on what happens between now and then. If the heat gets taken out of it. that'll help them enormously. If they go into it like Palantir, the same result,
Yeah.
in my view.
Stacko asking, how do you come up with price through revenue growth? What you do is you say, right, what multiple should this be trading on in a normal world in 3 years' time? 25 times sales.
Which one?
Palantir. So to get to 25 times sales,
You'll have to have at least 40% revenue growth.
well, that's yeah. So that's you extrapolate, right? What is today's? What multiple does it have to be on today to get to 25 times in 3 years' time? And then what price does that give you on today's revenues? Last thing, where do people find more of Piers Buckworth? God help us all.
Is that a question?
That is a question.
Is that a real question? Substack. Come into my Substack. I've got 400 and however many people it is, and it's a great community. And
Explain what Substack is to people.
Substack is it's an app. It's a platform for publishing. It can be used for multiple purposes. I'm using it as a private community of people who love markets and want to learn about markets, and where I can do. I've loved teaching people. I've discovered I've got a true passion for it, quite frankly. And everyone who I've got in my group, they're all great people, and some of them are from all different walks of life. But there's one common theme: everyone loves the markets and wants to learn more about being good at it. And it's private, it's safe, over the paywall, away from all these scammers, and it's just 24/7. I literally. I never stop, and it's fun. But if you're a market addict and you want to learn more, come in.
And if people, Substack is a bit alien to them, they can find you on TikTok.
Well, if you go to my bio on TikTok and just press the link, the link tree link, it'll take you straight to the Substack link, and then you're in. And
Brilliant.
Jacob will help you out if.
Speaker, the devil, there is Jacob. Substack
There he is, the
live,
big boy.
Alive with Piers.
Oh, that's true. Tomorrow night I'm doing a live at 6:30 GMT as my head of operations. Jacob has just mentioned.
Oh, that's perfect, because all the paint will be dry on my wall by then. So
There he is. So anyway, anyone who wants to know more, that'll be tomorrow night. Oh, there it is. Go Jacob, what a hero.
good stuff. Right, everybody, thank you very much for joining us. Give us a subscribe on the channel on YouTube there. And then coming up next, Andrew Webley of Smarter Web Company, and we'll be finding out the answers from Andrew on strategy going forward. Join us shortly. Welcome to the Art of Investing, a brand new podcast to help you achieve your investing goals.
And I've seen at first hand the power of the wealth creation that one has been able to obtain from this industry. What we're going to do is we're going to put it into action by creating our own model portfolio.
We're going to be talking about the big indices that are around the world, because that is probably some of the safest ways for you to invest your money.
We need to bring this to everybody and help them then take control of their own investment story.
Join me, Rich McDonald, and my co-hosts, Mark Spice Holden and Chris C.J. Fellingham, every Friday when we bring you updates from the markets and insights from our combined 100 years of investing experience.
Hello, I'm Axel Rudolph, Senior Technical Analyst at IG and Fellow of the Society of Technical Analysts with over 30 years experience in trading the financial markets. I've been following cryptocurrencies from the very beginning, and with IG's new crypto offering, I can finally share my technical analysis expertise on crypto with you. So join me every Wednesday morning for my new show, Charting Crypto, where I'll be answering your technical analysis questions on all things crypto, live on Trade Live with IG.
welcome back to the show. And we have not long, but so we're going to get through a very, very fast preview of what is going to come. I've got SWC, of course, waiting in the wings. Just checking on Robinhood. I know you talked about it already. That's reporting. Also, you heard Piers talking about AppLovin as well. And Robinhood, just telling you that this, I am hoping for good things. I entered at 124. It's now at around 137. So I'll be watching that for you with a BDI. Any of you have positions on Robinhood too, let me know. Analysts forecasting revenues of $1.2 billion there. For more on the tech stuff, I have also written a report and a story on whether or not this is the beginnings, the cracks of a bubble or not. And producer Phil is going to slam that into the chat for you. Bringing up Angie's Market Espresso, where we get you your morning shot of what's ahead. Keep an eye on Qualcomm because it's all about tech. Qualcomm expected to report Q4 sales jump thanks to this rise in global smartphone demand. That is expected to be good for Qualcomm because it means increased demand in its chips. Also, we've got McDonald's. I was going to talk about this with Mini Cooper earlier on, but all your questions, which came thick and fast, kept us very, very, very busy this morning. McDonald's, this is the Angie's Market Espresso there, if you want to snapshot that. McDonald's is also set to post a jump in sales. This is for the third quarter. And keep an eye out on what it says about, its combo meals, which have been aimed at the lower end of the market because it wants to make it more affordable. Any news on whether or not the lower income consumer maintains its appetite for McDonald's and a tough restaurant setting? Those of you that travel a lot like myself will know that it's not just about high inflation, but also in some places around the world, people are not wanting to eat at McDonald's because of the orange man. Also, payment trends. Take a look at that as well, whether the constant move at McDonald's trying to get everyone, including those in Southeast Asia, to also start using the contactless terminals that you see across here in the UK already, whether or not that is impacting sales in countries where they're used to humans still being at the tills. Limited time offers, they've been pushing that as well, and the pricing strategy for the year ahead. Last but not least, you hear me talk about this all the time because it is a space that I am very interested in as Monkey Man, RSAX, all of you know. Obesity drugs, are you loving it too much? That is the question. Obesity drug M&A, you heard Rich talk about, Pfizer, Novo Nordisk, and the fight for Metsera. So Metsera, just going to zoom in for you. Metsera is, of course, this drug developer that Pfizer and Novo Nordisk have been in talks with, reportedly. Both companies have apparently submitted sweetened bids, with Metsera saying Novo's $10 billion offer is superior. And I get questions from Dom, call out to Dom in the gallery about this all the time. It's all about swooping in and bolstering your portfolio with something that you do not have. For those of you, just because I've got very little time left, but I'm going to give you the secret sauce here, the secret sauce that is not going to make you need obesity drugs. You might say, oh, Ange, I've already missed the boat. Let's have a look at Metsera for you. I've already missed the boat. I missed the party. However, it's got to be in 30 seconds. Here's the secret sauce. You haven't missed the boat because if you look at companies like Viking Therapeutics, you heard myself and Julian talk about this here. If there is a deal, then Viking Therapeutics is likely to jump because Viking is also seen as a takeover target. There's also Structure Therapeutics, which also tends to have a bounce every time we see some positive mood music surrounding Metsera. So you have not missed the boat. And there you have it in 30 seconds. Stay right there because we have SWC coming up next.
Do you like the sound of tax-free trading? Well, that's exactly what spread betting enables you to do. This tax-free way of trading lets you speculate on the price of over 17,000 financial instruments, like shares, indices, Forex, and commodities without actually owning them. With spread betting, you can benefit from both rising and falling prices, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going down, then you can sell short. Not only is spread betting exempt from capital gains tax, but it's also commission free. All you pay is the spread. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves. Welcome to the Art of Investing, a brand new podcast to help you achieve your investing goals. Join me, Rich McDonald, and my co-hosts, Mark Spice Holden and Chris CJ Fellingham, every Friday when we bring you updates from the markets and insights from our combined 100 years of investing experience. If you're looking for flexible ways to trade financial markets, whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares, indices, Forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades, but also remember your losses are also amplified. So be sure to manage your risk. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade CFDs with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves. Welcome back, everybody, and our friend of the show, Andrew Webley from Smarter Web Company, joining us. Andrew, welcome back.
Thank you. Nice to be here.
Slightly different studio this time, isn't it?
Yeah, it looks good.
Yeah,
Looks great.
We've
Good job.
We got the brick wall in and the comfier chairs,
And they are comfy.
and they are comfy. But you're probably not quite as comfy yourself as you were last time sitting here. Remind us, the very first time you were in a studio, I think the market cap was about £20 million. And how many Bitcoin did you have at that point?
Very, very few. So today we've got over 2,500 Bitcoin. And this is, just under 6 months from when I was here last time. We've been listed for just over 6 months now. So, it's been quite the ride, 2 months of, the share price going vertical. And then obviously 4 months where it's been under more pressure.
Yeah, I think it's probably the greatest example we've seen of the company doesn't set the share price, right?
Very, very much so. And also the disconnect between a company and its share price, because today the company looks better, stronger, we're busier, etc., etc. and the share price has obviously been on a downtrend for 4 months. So yeah, I completely agree.
Yeah. If anybody looked at the company in isolation, right? If other companies' chart looked like this, we'd think, oh my goodness, what's happened? Has there been a profit warning? You know, what's gone on? But as we can see from the slide, it's happened to the whole industry, hasn't it? Really, if we take us through the 4 different share prices.
Yeah, so just a disclaimer, I hold all of these shares. You know, you've got the Smarter Web share price, so you can see, you know, it sort of, you know, touched £5 and is now closer to 50p. You can see Metaplanet, which is sort of the number 2 in the world, I suppose. You can see that their price has gone through a similar, you know, extreme contraction. You can see Capital B, which is a great French company, you know, the biggest Bitcoin treasury company, about the same size as us in Europe. You can see the same again, and then the axes on the timescales slightly out on the strategy one, but you can see a similar, albeit less extreme, because they're much, much bigger. So yeah, it's certainly not isolated down to us, and every single one of these companies, in my opinion, has been improving the strength of the company over that time period alongside that.
Yeah, and it's not just the share price, is it? It's the MNAVs as well. I think the viewers are all, you know, au fait with the MNAV story. We saw the huge increase up to, realistically anything above 10 was sort of getting into maybe a little bit of fantasy land, but it's the contraction from 4 down to where we are today that's maybe caught people off guard. Is there any reason that you can put your finger on of why we've seen a global contraction in MNAVs?
Yeah, so I think, you know, in my opinion, markets are always priced wrong. So they're either too expensive or too cheap, you know, overpriced or underpriced. You know, if you look at our company, for example, so in the current quarter, which we're 1 month into it, we've delivered 1.74 Bitcoin yield, which is the compound Bitcoin. In the previous quarter, we delivered approximately 300%.
Yeah.
Strategy is a good example. This year to date, they're delivering almost 30% Bitcoin yield. Still very, very impressive if you compare that to, you know, like a traditional interest rate or something. Yeah. Now, in my opinion, if you look at us, you know, we're priced at 0.8. So we're priced 20% cheaper approximately than the actual value of our Bitcoin. For a business that's demonstrating that they're improving their Bitcoin yield. So we're probably the only one actually out of the bunch. Strategy's about a 1.3, Metaplanet's about a 1, Capital B's about a 1.5. We're 0.8, fully diluted MNAV. So it's just the way the market's gone. They're all, in my opinion, underpriced now, and perhaps they were a bit overpriced.
I mean, you would say that, right? Yeah. But if we take strategy out of it, let's say then Metaplanet, Capital B are trading at 1, which is the equity is purely a representation of the Bitcoin that are currently held. And that's it. You may as well buy Bitcoin, is what the market is saying. However, at 0.8 or 0.82, what's going on there? How can SWC be trading at a discount? Because surely, in theory, I know you would be very hesitant to, but in theory, you just sell all your Bitcoin on the market and you give the shareholders back their cash, and a company would be worth, you know, 0.99, say.
Yeah, so, you know, us selling any of our Bitcoin would be an extreme last result. You know, that would be, you know, pretty much, you know, give up type territory, which, you know, we'll probably never do. But you're right, yeah. You know, it's as simple as that. The reason why you don't do that is that the strategy that we're on for the years to come, you need size. So if we're going to do some of the things that we want to do in the coming years, we need size of balance sheet. So yes, you know, ignoring the fact that I believe Bitcoin's the very best asset in the world and we're just priced wrong, then you wouldn't look to reduce the size of your balance sheet, because then you're impeding on your future strategy goals. And
your fundamental review remains that you would much rather be in Bitcoin than you would in fiat. So your share price is in fiat currency.
Yeah, 100%. So Bitcoin, and one of the reasons why I think you've seen this compression of the global MNAVs is that Bitcoin has disappointed too many new people this year. people that don't understand it, people that have literally just got into it, or Bitcoin treasury companies. So if you look at Bitcoin year to date, it's probably showing a gain of something like 5%. We believe that Bitcoin will probably do approximately 30% every year. If you look at the last couple of years, there's been one bad year, most years over 100%. So this year, Bitcoin hasn't delivered, taking this year purely
It's taking a breath.
Exactly.
It's bizarre to see the movement in gold relative to Bitcoin. So it's been the more traditional safe haven, but fiat currency has definitely depreciated. So there's still that running theme.
Well, there's a good link if you look at the last run up in gold, and then you look at when that dipped, and then you look at what Bitcoin did next. That's a good one for your viewers to have a look at on the charts. That was incredible. Bitcoin ripped once gold started to dip.
Okay. So I guess the question being, right, is what options change from when you were trading at a 3 times MNAV? It was very simple. You were doing the ATM, you were doing raisings, issuing more shares and buying Bitcoin. When you're trading at a discount to MNAV, how does the strategy change and what options are open to you?
Yeah, so we had all these conversations with people right at the start because clearly, the current situation was something that you plan for.
Yep.
And you do have options. That's the first thing to say. So the simplest one, which is an option, it's not the best option, but it is an option, is you do nothing. The thing that everyone also needs to remember is that we are quite restricted on what we can say. So, just to get that disclaimer out there as well, but in simple terms, not making any specific timing or strategy calls right now, your options are you can effectively borrow money. So you can borrow money that doesn't convert into equity, and you can take a view of how much you should borrow relative to your balance sheet and how you're going to structure that in terms of the interest repayments and potentially the capital repayments. And then you can use that to create pretty significant Bitcoin yield, actually, providing the long-term view, over years, not days, of Bitcoin is what we all believe. So that's one thing that you can do.
So that's just very simple debt that is collateralized by 220 million pounds or 200 million pounds?
Approximately 210, 215, using the current valuation of Bitcoin. So you could quite easily, I'm not saying that you would, I personally think this would be probably too high. You could probably borrow over 100 million pounds if you wanted. I think the right number for something like that is probably closer to, say, 30 to 50. And that still allows a large amount to be borrowed if you wanted to do that. Not saying we will, but also if Bitcoin had a terrible year or two, you're probably looking at sort of 15,000 Bitcoin in terms of when that would potentially become a problem. But there are other options. So if you were, say...
So can I just ask, what's the approximate interest rate on that ballpark?
I wouldn't want to say, but I think you would be in the UK, I think if you were guessing somewhere between... sort of 6 and 10, it's probably...
it's high single figures.
Sort of mid to high single figures. Which if you believe in assets going up by 30% a year, high single figures isn't that bad. And if you look at Strategy with their prefs paying 10%, we can effectively borrow money cheaper than Sailor can borrow it. So high single figures isn't bad.
So then if you're trading at a 20% discount to MNAV, then isn't the loan better to buy shares back rather than buy more Bitcoin? So, because we know the ATM is one way to buy more Bitcoin and finance that when you're above MNAV, but when you're below, then you're buying discounted Bitcoin essentially.
So with the loan, you can basically buy Bitcoin or you can buy shares. That's the two crude options there. In the same way as other things would allow you to do one of those things. So the bit you can do the maths on that. But the one thing that the maths doesn't tell you is the medium to long-term direction of the company, which is growing the balance sheet to allow you to do preference shares rather than debt. Because the one thing about preference shares is that it's permanent capital. So with preference shares, you have to convince someone to lend you the money on that day. and you have to, structure the payments in such a way that they're happy, the day after they lend you the money, because the Bitcoin isn't collateralized, it's a completely different structure to if you borrow money and you have to convince that person forever that you're good for the money. That's the one difference with a preference, broadly speaking, the one difference with a preference share that I don't think a lot of people understand. It's permanent capital that once you've convinced them to lend you the money, then, it's as simple as that.
And where does that share sit compared with an ordinary share then?
So they would have more rights, effectively, or effectively in terms of the capital structure on the assets of the business. Should the worst happen, so you'd make them senior in that regard. But you can also make different preference shares at different levels on the cap table as well. Okay,
so that's one option. So there's pure debt from a financial institution. There's a preference share.
Yep.
The smarter bond was last time that we spoke. Smarter bond seemed great at the time, but it hasn't really, sort of taken off.
Yes, we've only done one round so far, and we've got other people that are interested in doing that. But if I'm honest about it, I don't know why there's not more demand for it than we've seen, because it is a great product with almost no downside for the investor. I think one of the problems, or one of the bits of feedbacks that I had from somebody who's got an awful lot of Bitcoin, is they weren't keen on effectively crystallizing the tax event, in terms of when the Bitcoin sort of converts into equity, and that dilutes their side of things. But it's a fantastic product. I was actually thinking this morning for myself, actually, that I might do Smarter Convert myself,
right?
Because it is such a great way. But I think for myself, when we come out of the closed period, I think it's more appropriate to do the equity to put myself on the same terms. But I was thinking this morning, I was thinking, I've got this Bitcoin, why don't I just stick it into the company? Because it's such a good product. But there are other options as well that you can do in terms of you can do option strategies and things like that. So there are plenty of options when you're below a 1M NAV.
Yeah, so it's really, when you're trading at below 1M NAV, and we know we've spoken about this morning already, there seems to be some kind of strain in financing in crypto world at the moment.
Yes.
When that happens, you have to sell what you can sell, right? So if there's a investor that SWC is their liquid thing, but it does seem to be a daily event that somebody's there selling. Now, of course, I worried at one point it was the ATM.
Yeah.
But you've said you'll be disciplined about the ATM. Where does that sit? What are you judging on an MNAV, or how are you judging where to operate it?
Well, so our partner operates the ATM, and to date, I've been delighted with how they've done it. They've not put a foot wrong, as far as I'm concerned.
Good.
And I would imagine what they would do is they would sell at a premium above a 1M NAV.
Okay.
Because it wouldn't make any sense to sell the shares below a 1. That would be terrible for the shareholders.
Yeah.
So you just wouldn't do it. But then you wouldn't sell them bang on a 1 either, because you've got a tiny amount of commission that goes to them. You've got a tiny amount of costs when you buy Bitcoin. You've got the volatility in between when you sell the shares and when you buy the Bitcoin. So you would probably, if you were really keen on generating money through the ATM, you'd probably do it at a 5%. You would
at least 105.
Like 10% would probably be more sensible, and then obviously the higher the better.
Okay.
If you look at the most recent update that we did, where there was a tiny amount, 0.3 million, raised, I think that was something like 68p.
68, yeah.
Which is considerably above the share price at the time. So if we look back at the ATM, since it started, I think it's fairly evident that it's been a very beneficial thing for the company. Approximately 25% of our capitals come from the ATM.
Wow, is it as much as 25%? That's incredible.
Yeah.
So it really, because it is perplexing to people. I mean, we look at it now, and we're trading at 43 to 45 pence, and we think the MNAV is roughly where then?
Just below 60, I'd say. It's on the analytics page on our website. From memory, maybe 57, 58.
So do you have any feel who's liquidating below that that sort of 60p then?
No, so we look at all the different stats, and we speak to market makers both in the UK and in the US to try and find out if there's any particular pockets.
Yeah.
And sometimes we find out that there might be a big seller, from the UK or from the US, for example. The two biggest holders, which is the UTXO fund, and myself and my wife clearly neither of those have sold anything.
Yeah.
And that equates to about 25% of the equity. One thing that we believe is that the Bitcoin treasury companies as a proper sector is a new sector as of this year, even though you've got strategy that's been around for over 5 years. And that view is shared by Saylor as well, in the sense that this is a new sector. So I think one of the explanations for it is that there were a lot of people that bought the momentum that probably aren't so passionate about the model.
Absolutely.
Don't see the model as being a long-term thing. We believe that probably in the next 5 years that Bitcoin treasury companies as a sector will become the most valuable sector of companies in the world. Clearly that's a view that's not shared by everyone at the moment. So it's probably something along those lines.
And we had a question: why should anybody, any company, trade at above the amount of Bitcoin? What can you do that warrants a 1.5 or a 2 times or 3 times MNAV?
Well, if you look at the Bitcoin yield that companies such as ourselves generate, even if it's only a few percent a quarter, that justifies above 1 MNAV, because effectively that Bitcoin yield, the increase in the Bitcoin per share, is increasing the amount of Bitcoin on a look-through analysis. So
And that's what people call the flywheel.
Yeah. So the Bitcoin yield is the compounding of the Bitcoin, which justifies the model. The flywheel is all of those different capital tools that you can use. So if you look at the UK Bitcoin treasury companies, we are the only one that's actually been able to demonstrate that the model can work.
Yeah.
And that model is equity, ATM, smart to convert, potentially straightforward debt, potentially preference shares, potentially option strategies. The flywheel is everything that allows you to create the Bitcoin yield.
But it's chicken and egg, isn't it? Because you need a higher MNAV to warrant a higher MNAV.
You not really. You need a positive Bitcoin yield to convince people that you have a higher MNAV. If you have an higher MNAV, you can sell more equity. Selling equity is way better than selling anything else. But because there are strategies that you can use when you are on a lower MNAV, you can generate Bitcoin yield to a degree. Right. But if you've got a much, much, much higher MNAV, you can sell a lot more equity, and it's far more accretive than the other strategies without the risk that debt entails.
Yeah. And the great thing is you acted so quickly. You've got that big asset pile, right? What can you do to use and utilize those assets to earn profits? Because a normal company that we'd finance, that we would sort in financial markets that we would value, would be the amount of your assets and then your earnings, and we put your earnings on a multiple. So if you could get a yield from your crypto, you would attract potentially a, say, 10 times earnings multiple on top of the asset value, and then that would give you your MNAV multiple. Is there optionality around using the assets?
Yeah, of course you can. So we've explored a lot of those, and currently I'm not happy with the small amount of additional risk that you'll generate, to probably get, say, between a 4 and a 6% yield annually. Okay. But in simple terms, ignoring the risk part of it, you can effectively loan your Bitcoin, and you can get a 4 to 6% yield.
Okay, so that's about 10 million a year.
Yeah, approximately.
So, but that 10 million, if we put that on 10 times earnings, is 100 million.
Yeah.
So you end up trading at 1.5 times MNAV, and it kind of all works.
Yeah, it's just the risk element, but there is one way that we've found to do it, which has got almost no counterparty risk.
Okay.
So we're certainly seriously considering it, but as we're talking right now, we haven't done that. At some point, that will be something we can do. The other thing that we and we've been honest about this since the start, that we are exploring, but we will only do it for the right opportunity, is the acquisition elements against the core business, where we can pull in basically low risk businesses that are within the area of expertise that I've got, i.e. the web design and marketing sector.
Yeah.
And then we can use that to substantiate that. But you know, I've got to stress that we would only do those things, you know, if they're the right deals. And part of the right deal is the right price to pay for something that, you know, because, you know, if we're going to do a deal such as that, you know, and we're effectively doing it with our equity, if we believe that our equity is undervalued at the moment, you know, the deal's got to be even better to justify it.
That's the problem.
Because our equity is our currency.
Yeah, because it's a very normal thing for CFOs to have to choose between more equity or more debt.
Yeah.
And I think any CFO that, when you're trading at a discount to your very liquid assets, debt becomes a very real and potential option. But yeah, we can't forget that you are a company outside of the Bitcoin holdings.
Yeah.
And how is the web business going?
Yeah, so, you know, we're starting to develop our profile and it to be better. You know, we've got a big rebrand underway at the moment. We're keeping the name, you know, spoiler before anyone sort of asks about that one. You know, and we're very proud of the name. But we believe that we've got a really good brand that will work for all of the different things that we do as a business, that hopefully in the next, I don't know, maybe as soon as the next month, probably the next 2 months, we'll be able to unveil.
Right.
So that's been going for a couple of weeks now. But that just takes time, like everything else. I think the most, or if I could leave one message with everyone, is, you know, we've been a public company for 6 months. You know, we've achieved a lot. We've gone from 1.6 million pounds worth of Bitcoin to over 200 million pounds worth of Bitcoin in that 6 month period.
Yeah.
You know, we believe that we've got everything right as a company for the future in terms of our strategy. You know, we're doing all the right things, many of which we're not allowed to talk about at the moment. And, you know, we believe that within another 6, 12, 18 months, you know, we'll be in a vastly different position to where we are today. You know, so it's very difficult to ignore the sort of the hours and the days, but it's better to focus on the weeks and the months to look at the things that we've achieved. You know, we haven't got everything perfect in terms of our decisions, but we've done most of it pretty well, and we're hoping that we can continue that.
So I guess to summarize, that it looks like a bit of indigestion in the market. If we can just get that share price back up, please, guys, and we'll bring the timeline in if we can. So let's look at specifically around about that MNAV, because that's the real tough part. Now, we think that the MNAV is around that 60 to 64 pence kind of.
Yeah, let's call it 60p.
60p. So it is really just since the end of October, in the last week, that you've seen that you know, significant gap. Because I mean, that, you know, what have we dropped? That's 16 pence, so 25%. So potentially 25% under MNAV.
Yep.
Is there? I remember there was warrants that came out with. What's the update on the sort of warrant situation? That
so that MNAV that we're talking about is fully diluted. Those warrants, you know, nothing can be done with them until April next year. So the end of April as well. So there's absolutely nothing, no impact in terms of market. You know, there might be a sentiment thing from the warrants, perhaps, but the warrants were known since the start. You know, it's how we had to structure it. If you remember, when no one wanted to support a Bitcoin treasury in the UK, that's why the warrants existed.
Yeah.
Obviously, very different afterwards. So yeah, I don't see that they've got a part in the current price. I think, you know, in very, very simple terms, it's shot a bit too far. You know, my old boss, Peter Hargreaves, who I used to work for, when I was complaining to him about a company that he was involved in that was sort of not performing very well and ended up performing fantastically, one of my best investments ever.
Right.
He said to me, I don't want to be rude, Andrew, but, you know, the share price is a simple case of buying and selling, you know, so.
Well, yeah, that's the thing. It's somebody's liquidating or being liquidated.
I think there's probably quite a lot of leverage that's been used for Bitcoin treasury companies.
But you the warrants literally do not become active until next April.
Yeah.
And as of April next year, then 60 pence in today's pricing would be the MNAV.
Yeah,
so
correct.
There's not another overrun.
Yeah, fully diluted MNAV.
Right. It's a real struggle to see why they're trading at 44 then.
Yeah. Well, it's very frustrating because we're in a closed period at the moment. So,
Yeah,
like,
of course.
someone like me is not allowed to buy any shares. And, you know, as much as I don't want to offend my friend Alex, who runs Capital B, I would probably sell the lot for our shares right now.
Right, because he's trading at one
Yeah,
times
he's
MNAV,
trading
yeah.
at 1.5. We're trading at 0.8. So, you know, the sensible thing for me personally would be to switch out of that into that, but
Yeah.
not allowed to do it at the moment.
It's been quite a remarkable journey, hasn't it? And Maturin on our Discord runs a Discord here, and he said very good of you to take the hot seat as it was. You know, the journey started here at 32 pence,
Yeah.
and you know certainly the viewers had their chance to make a lot of profits, and then subsequently have. You know, some have lost money because some got in at the wrong point,
Yep.
as you have as well, because you've been buying shares the whole time for your own personal
Yep.
account, as has been disclosed. How has it been? How's that sort of euphoria that's turned? You know, how are you doing?
Yeah, so you know, I share the journey with the shareholders, and I wish that the share price was higher. From a personal point of view, I'm not in the slightest bit fussed because I know where we're going, and I believe that just as all of those people, or a lot of those people, made a great deal of money in quite a short amount of time, I think we're just about to start the next wave, in my opinion. That said, you know, it is horrible seeing people that I can't speak to completely freely because of the rules that exist, and you know, I don't know their situations or how they've structured it or their timescales and things like that. So you have mixed feelings, really. You know, on one hand, you're incredibly confident because you know that everything's going in the right direction, in your opinion. But then on the other hand, you have things that you can't control, you know, but that's just something that I'm getting used to as being the CEO of, you know, what's become quite a successful UK company.
Absolutely. And it's it's been great to watch the journey. We're getting some comments in, refreshing to have a host be so knowledgeable. I think that's a little dig at Sedgwick, isn't it? Because you were on CNBC and Steve Sedgwick did not get it at all.
He didn't like it.
No, he didn't.
like it. But I would love to go back on there because maybe he sees the value now.
Yeah. On that note, thank you all for joining us. If you're a first-time viewer of Trade Live with IG, we talk about smarter web. We bring it up, you know, at least 3 times a week, and we every time there's an RNS. So please subscribe to our YouTube and give us a thumbs up if you have enjoyed Andrew's interview here and want to thank him for coming in. So thank you very much for coming back in. You're absolutely always welcome. And yeah, who knows where the share price will be next time you come in to visit us, or you might be too big for us by then.
Never.
Thank you. Thank you all for joining us today. We shall see you tomorrow morning. Reminder, 7:30 a.m. for the overnight news. Where will Bitcoin be trading then with its first dip below 100,000, but surviving so far back up above that important psychological level. But yeah, we'll be back tomorrow morning, and yeah, stay safe out there. Peace.
And we are back. This is Overtime. I'm Ilya Spivak in San Francisco. That's Dylan Radigan in Milan, our returning champion with a very fancy sweater, Mr. Jamal Chandler in Chicago. Gentlemen, do we have anything here? I mean, what is this today? Were the markets open?
Jamal?
Easily one of the most boring day in well over a month. Quiet day, if you will. I mean, there's really not much to speak of. Markets seem to be calming down just a little bit over the last 4 days here. I mean, what can you say? Honestly, it's probably needed. It's probably what's best. But you know, I have to walk back my comments about this is the greatest market alive because it has been up until today.
You're gonna abandon it after 1 day, Jamal? Come on.
It needs to keep going, Dylan. It needs to keep going for me to continue to call it that. Okay, this is not okay. It's not okay.
How many times do I have to say buy the dip?
Is this the dip to buy?
Yeah.
Every dip is a dip that you buy.
So,
although this is
looking at-
not a dip, this is not a dip. This is
not a dip. Okay, so this doesn't count as a buyable dip.
Just a day off among friends. Just relax.
Got it.
What do
Got
you, you know, not every day can be a trip to Disneyland. Okay. Sometimes the market opens, the market closes, prices, they didn't change that much. Everybody can calm down.
So sometimes you just go to 7-Eleven and get a Slurpee instead of going to Disneyland that day?
Sometimes you get a Slurpee and calm down.
You don't get the hot dog though. Listen, word to the wise.
Never get.
I don't think I've ever gotten a hot dog from 7-Eleven.
No. My college self reaches from the annals of time and says, "Don't do it."
I have to admit, I was once slipped an edible, and it did result in a hot dog at 7-Eleven.
I like where this is going.
Resulted in no more edibles and no more hot dogs at 7-Eleven.
The annals of time they call. I would point out, here we have the S&P 500, and there is the beginning of last week, which would be the glorious gap here and continued supernova-like situations. Then there was the Fed, and then there's everything else. So something happened right here, clearly, and I would argue it's the same thing that we were talking about at the beginning of last week. This idea that the markets were priced for perfection. They had three pillars that they were standing on. The first was that the tech earnings were going to be fine. The second was that the Fed was going to endorse their pricing for 2 more rate cuts, one in October, which obviously now we have, and another one in December, and that the Trump-Xi meeting was going to be fine because Bessent was already out there. He already said everything is cool. These two just need to rubber stamp it. The rubber stamping was commenced. No issue there. The tech earnings were, for the most part, fine. Meta obviously missed. Other than that, for the most part, okay. The Fed threw a grenade out there. And we can see it.
An unwelcome grenade, I might say.
An unwelcome grenade.
No,
where Powell came out and made a whole show.
Made a whole big show. No need for that, sir.
Big show. Came out there, pounded the podium, did the stuff.
Said a little hear ye, hear ye.
And what do we have to show for it? The market sells off the very next day and has been listless since.
I mean, listless since you speak as if it's some sort of epic sojourn, and yet really we speak only of a few days.
This is certainly the case. We have a sell-off in the wake of the Fed and then not follow through. So the markets are not, as it were, panicky or anything of the sort. They are, however, unsure of how to proceed next. And this is an interesting thing because today we actually get a little bit of economic data. It's not good as such. The ISM manufacturing index comes out, and it comes out weaker than expected. A contraction in manufacturing activity was expected. They got the contraction, but it was a faster contraction than expected. Not really great signs in the internals of that report. Employment on the manufacturing side shrinks again, albeit at a slightly slower rate. New orders fall, albeit at a slightly slower rate. Inflation cools, but is still very elevated relative to even recent history. Although, in fairness, since inflation peaked earlier this year in this survey, it's down a lot in terms of pace. It's still rising, but at a much slower rate. So, still high by historical standards, not nearly as high as it was earlier this year, rising, but slower. So, kind of a mixed bag. Market ultimately doesn't do anything with it, but when the numbers come out, you can see that right here. See if we can pull this up to a shorter term chart. Okay. So, it's not like we don't notice, but we also don't really go anywhere. So, it's an interesting sort of thing. The markets don't love these numbers, but ostensibly they also don't hate them, and we're in kind of a weird sort of no man's land still. And of course, we're still on shutdown. So maybe we'll get an NFP number at the end of the week. Maybe we won't. We'll get a service sector ISM number on Wednesday. We'll get consumer confidence from the University of Michigan on Friday. The earnings calendar is kind of slow, barring Palantir, which we'll get to as soon as it comes out here. Anything on this standstill, gentlemen, that gets you to think that there is a decision to be made?
Standstill in the government, or you just mean
Long, short.
standstill markets?
Are we doing anything with this?
Not really. No. I mean, it's not interesting enough. We're just kind of watching. I mean, we're watching from the sidelines. The one thing is that we noticed from early this morning when Tony and I were on, the VIX futures contract, the November contract, was 19, like 1910 early this morning. It did sort of fade towards the end of the day here because basically nothing happened. And I mean, I think that's kind of your cue. Like, not much is going on. There's no reason to really force much of a trade, if you will. I mean, the really only thing is this weak earnings slate that's coming up right now. So it's and I say weak because, again, a lot of the big ones have gone. I mean, this is one of the last big-ish ones, but again, this is not a Mag 7 name. This is just one of their friends. I think the other big news is for today is, look, pick a name from the tech space. Pick a big name from the tech space and get out a blank check and write in however many billion you want and add OpenAI onto it. And that's been the theme for the better part of 2 weeks. Every day we come in, there's a new deal with something involving OpenAI and somewhat of billions of dollars. And today that was Amazon.
They're building quite an ecosystem here. Palantir I have on the screen. It had a little bit of a pop here, clearly, as it came out. Not really holding yet, but we'll see. It's early yet. Results were a little bit better than expected. 17 cents a share expected. It was 21. Revenue of 1.09 billion expected, 1.18 actually. So 24% beat on EPS, 8% beat on revenue. Not bad. Clearly, and the markets like it, clearly. But Jamal, to your point, this is not one of those $1 trillion market cap situations. We're talking about, about 500 billion-ish market cap? Now, in fairness, this is the biggest name of the week as far as kind of heft.
Well, there's AMD this week.
AMD
this week. AMD is probably still there, right?
AMD is this week. It is a smaller name, slightly. 380, almost 381 billion market cap. But obviously a big name in the kind of universe of tech names.
Yeah.
And AI adjacent names.
True.
Qualcomm is also on Wednesday, as long as we're sort of looking at that. Maybe if we care, Robinhood. That's on Wednesday too. But I'm kind of kind of struggling to find something that's going to necessarily move the needle here, like the names that came out last week could have, and they didn't. Not really. I mean, if we...
So how about, can I offer you a different point of view, if I might?
Yes, sir, of course.
This is obviously not going to be an earnings-driven week.
I would think
Nor is it
not.
going to be a data-driven week because there's no data because the government shut down, blah, blah, blah. And we know where the Fed stands, which is less rate cuts, not as soon as you think, just calm down.
Right.
Which leaves us with two sort of obvious trades from my humble and conservative and reliably, inconsistently accurate perspective. One, you got to buy the U.S. dollar. What the hell's the matter with you? If the Fed is doing what they're doing and the dollar has been jammed up as hard as it is, and I know the dollar's already performing, I feel like long dollar trades are an intelligent individual's point of consideration as long as this new Fed posture exists. In fact, I would even, as you twizzle the dizzle there around the end of that chart, I believe that ties directly to the come to Jesus speech from the Fed chairman.
It most certainly does.
So rather than sort of noodle around in the sort of unknown and unknowable world that is all the financial markets, let us isolate on a few things that we can identify. One, the pot odds of a stronger dollar have gone up substantially. The dollar has gotten stronger meaningfully in the most recent days, and there's reason to believe that it could continue to get substantially stronger from here.
I would concur. I would in particular point our attention to the euro, which at the end of last week made something of a technical break through what was support and ostensibly opened up some room for extension. Not all of them look like this. So again, here's the euro. Here it is breaking lows last week and exposing lower levels. If we looked at the pound, where, by the way, we have a rate decision this week, it also seems to be grinding through something or other. Although, in fairness, if you look at the spot level, and this is the most convenient thing ever, that we now have spot on these charts, and we can look at that as well. If you looked at spot, it's not quite breaking through yet. So when spot and the futures don't agree, I usually default to what spot is doing as far as a technical kind of consideration, because it's the more liquid thing. And the futures sometimes have sort of contract related nuance. So I typically will look at spot to see if that's got the break. Pound is maybe not there yet. Aussie is maybe not quite there yet. Here's the Aussie right here. It's maybe still holding some levels, but the euro looks very much like it's crossed the line here. And so there are opportunities on the board here to be buying dollars with solid risk reward.
So again, in a world of unknown and unknowable, trying to focus on the things that have some variable, some at least logical basis for the trade. The dollar's been on a price extreme to the downside. The Fed has repositioned itself in a way that is dollar positive. I would also add to that, and you can take it or leave it, but recent news headlines that suggest that Berkshire Hathaway has been a mega buyer of U.S. Treasuries, which of itself is a dollar long position. So, the other thing, if you're long dollar, maybe also long bond, which I know may be somewhat contradictory to the recent Fed commentary, but I don't think that the Berkshire Hathaway crew is a bunch of idiots.
Yeah.
And so I don't mind entertaining a bond position, especially in the context of the recent sell-off. I mean, a sell-off is a strong word. The recent pullback, I'll call it. So I don't mind long dollar. I don't mind long bond.
So far, so good. I mean, I'm already long the bonds. I bought them when there was the break through over here. And then when we pulled back to retest it, I added some. So, and I'm doing this through TLT verticals, again, to keep size contained. As ever, I'm constantly attempting to reduce my exposure to big, sizable things in these weird markets. And so rather than using ZB or even 30Y futures or 10Y futures, which would be the smaller and the rates-based futures, I'm looking at the ETFs, using call verticals, and keeping size contained, keeping risk defined that way. And if we see a little bit of a wiggle higher here once we test whatever this congestion is, I'll probably add again.
So, again, because we can swim around in this equity mess till we're blue in the face, and who knows what's going to happen. But I would be, again, call your attorney here, because I don't know what I'm talking about. So I just want to make that extremely clear. But considering whatever my attorney and your attorney might, come up with, and considering the fact that I'm explicitly telling you I don't know what I'm doing, I am telling you I believe the dollar is a lovely opportunity for any young or old man or woman. And I believe similarly a long bond position is worth consideration. The third thing that I might venture in this vacuum of information post Mag 7 earnings would be Amazon. I continue to harbor great hopes for Amazon.
You're all over that one.
In the scope of the Mag 7. Now, my hopes have been somewhat diminished because you can see the price action that has occurred, which
can we just pause for a second and say you wanted this gap?
Did I not, as a man who needs a lawyer to protect him from any of his opinions, and you, my lawyer, should call your lawyer, and the fact that I don't know what I'm doing, but I would like to say, bullseye, my friend. I called that one dead to rights.
Weeks in advance.
I've been saying
weeks in advance.
I called that turkey right there.
Off this bottom, by the way.
Pure Radigan glory right there.
That's
when you buy,
I move we rename this the Radigan from the former silver situation.
I appreciate it. And when you buy your lady friend a new car, just don't forget to send my lawyer a thank you note. As long as I'm not held liable for future losses, I don't have any interest in your. And I hope you enjoy the money that you may have made, but do not hold me to account.
Past performance, as we know, not indicative of future results.
Any performance is not indicative of anything. Okay, it's all uncorrelated. As I said, don't know, can't say. But I did say Amazon's is the sleeping turkey out there, and that is correct. I mean, to
the point where you said they were due for a big gap, and we have a big gap.
As if I was a soothsayer in the piazza of Marrakesh with a cobra.
Do they call it a piazza in Marrakesh?
I mean, whatever. I get mixing up my languages.
We're picking up what you're putting down.
I think you understand what I'm saying, which is that I made a prediction and it came true, which I think is
yes, indeed.
Sort of we'll leave it there. But for what I would say now, I guess I'm a little less Amazon positive as a result of the gap that has henceforth occurred. But I still do love that dollar, and I don't mind me some bond. As for the rest of it, you're on your own. I can only do
Chandler. Let's come to you. You've been sitting there quietly. Let's come to you and get.
I'm enjoying this, man.
And get a similar readout here.
Well, but
in the absence of news,
call your lawyers and make your disclaimers, and then tell us your predictions, sir.
I'm sitting here because I'm happy. This is great. I mean, it's true. I can say that I remember when the Radigan surge was predicted. I heard it 3 weeks ago. Yes. You've probably been saying it prior to that, but
we were here. It was said.
I didn't know if it had been said prior to me being on, but yeah, you're right. That was when we talked about it. And it was a huge move, and it makes me say, and it kind of coincides with what I was saying earlier. It makes me say, what's the next name? What's the next big name that's going to do a deal?
Yeah, but I think all you need to do is call up the Mag 7. And look at whoever has not had a gap higher in the past 3 months, which is why the only reason I was nailing Amazon. So the obvious play here is going to be Meta. I would say this is probably the biggest opportunity in the Mag 7. If you're literally willing to abandon Meta because they had a Fugazi quarter and got a little jammed up, you gotta think about, you gotta better have a conversation with yourself, because I tell you right now,
Or maybe your lawyer.
or your attorney for sure. But I can tell you what, the folks at Meta know how to make money.
Yeah.
And they know how to make a lot of it. And buying Meta at a lower stock price is not a terrible concept.
In absence of any great trade out there right now, that's actually one of the ones that I like. I have that on my personal account. They're calendar call spreads, but I have some long deltas in Meta and in Microsoft post these earnings move. I mean, these are some of the bigger names, and if AI is the theme right now, these guys are at the forefront already, right? I mean, we've heard about different deals and things that they've had happen at times. So those are two of the more interesting trades for me right now.
And even if the IV is kind of not that hot, I still don't mind some put spreads, just as relatively low risk, relatively easy money on the board in the Mag 7 is running put spreads 45 days out on Microsoft and Meta. Even if you give yourself a little wiggle room on the downside, doesn't seem like a terrible concept.
I like it.
I mean, I will say this. To my mind, Microsoft looks a little bit better than Meta here from a
technical standpoint, yeah, for sure.
Perspective, from a technical perspective, at least it's near the bottom of a range where it's held, sort of give or take, rather than in apparent free fall. I would want some sort of an uptick out of Meta. I don't need to buy the absolute bottom. I would just need to get some kind of a wiggle to the top side to show where that bottom is, maybe, at least hypothetically, if it holds, and for that to give you a little bit of a better risk-reward math, at least to give you a jump-off point. So
I agree with you, but I would
wiggle here. You'd say, okay, back up here, maybe.
I agree with you, and that's prudent. I mean, that really is right. I mean, that's something that we're taught. We learn that, those of us who learn trading, because you don't want to be catching a falling knife. We'll pause it and say, this is Meta we're talking about in this situation. I think you at least start building a position, a small one, because when it goes, it's going to go, and you're not going to be able to get in. I mean, it's going to be going.
And might I also offer that the IV rank is higher in Meta, so the put spread gets you a little bit more meat on the bone.
That actually is an excellent point. Selling puts here does let you kind of look at this and say, well, you know what? I don't need to pick the absolute bottom. I just need for this thing to get less squirrely.
Yeah.
And that's it.
Run them at 600. Give yourself a little room. Run them at 600, 45 days out. Free money.
Well, let's take a look here. So we're at 637. Let's say we're not going to get greedy. We're going to look for a return to like 700-ish, to whatever this underside was, as a kind of preliminary idea.
Sure.
Okay. So if we did that, let's go sort of classic tasty methodology, in this case, 46 days out. And what we're going to do is we're going to short a put vertical here. Let's see where our liquidity is. It's not bad. And let's say if we were to push this out, as we said, to 700 or so, it's not the worst. I mean, we're not quite looking at 2-to-1 risk reward, but it's not awful by any stretch of the imagination. If we decided to essentially sit right here and say, okay, I'm just going to have a really tight sort of backstop here, where if it wants to keep going and doing, to your point, let's say you give yourself room out to 600.
You go.
Okay, it's a little bit, it's not as great, but you really don't have to go out that far. I mean, if you were, let's say, even just keeping the leash here real tight and said, you know what, I'm going to get in at the money here and maybe backstop out to 620,
sure,
something like that.
Yeah.
It's not too bad.
Not at all. I mean, this is one of those
Not too
names
bad.
where I wouldn't really mind being
And you have
short
to
some
look at
at
the
the money. Right?
probabilities. Sorry, Jamal. You also have to look at the probabilities.
Yes, I mean,
You got a 2/3 chance this thing pays, as far as I can see.
well, so the probability of profit here, 52%, but also you're close ish
To one-ish.
to one.
Well,
to one. I mean,
80
you're not
cents,
quite
80.
there, but it's not the kind of big skew against you that you'd hate. And of course, you're selling puts here, so you're getting paid up front. So not the worst. If, on the other hand, and I would probably, because I'm a very neurotic risk reward sort of a purist.
Let's go to your Microsoft. I know you guys.
If you went to Microsoft,
no, you like
and
it. You like it better.
the IV rank here is lower, so you could attempt perhaps to buy calls.
That's right.
And said, okay, let's just see if we can run this back to 550, 560. So back to these highs. So if you did that, again, 46 days out, and in this case, we're going to go long the calls. And let's say we ran them 560, by the way, nice and liquid. Not bad.
520, 560. What are we looking at?
I mean, we're
like that.
we're risking 1.2 to make 2.7, 2.8. I mean, this is better than better than 2-to-1 risk.
But also your probability is down to in the 30%, so it makes sense you get a bigger juice because you got a less lower chance, you know.
But if you're looking at better than 2-to-1 risk reward, all you really need is to be right about 33% of the time, and you're making at least break even. And this is better. So not bad. If you wanted to tighten it up and say, you know what, I'm just going to take a little punt up to 540 and that's it. Keep it small.
Still
not bad. Not bad.
So
1.3,
I'm doing it using November, December calendar call spread options. So I'm short the 550 and I'm short the 550 and 575 in November, and I'm long the 550 and 575 in December. These are in the personal account. That's the way I'm playing it. Give myself a little
Jamal,
time.
might I ask you a question?
Yes, sir.
What's with the calendar call spread?
It's
why that specific architecture, if you don't mind my asking.
Yeah, sure. It's a good question, and the funny part about it is I used to hate calendar call spreads when I first learned how to trade. Calendar call spreads are these trades that essentially emanate out of the fact that the volatility assumption one month is wrong and the other one is right. Right? Like that's how they initially started out. And that's how people made so much money back in the day on the floor. Something's wrong in 1 month in natural gas, but it's right in the next month. And so we're going to sell that month and buy that month. That doesn't really exist anymore, right? Everything is perfectly priced. What I use them to do, it allows me to participate to the upside without just buying straight up outright calls. It basically offsets my cost basis, right? And so
but why run a calendar spread to subsidize your long or your short position as opposed to just doing a normal spread? Like why take the time? Why instead of just selling a vertical, or why add the time component?
Because it's cheaper. So if I wanted to buy the, let's just say the 520, 540 spread in December right now, 20 wide spread, that's $8. Right? And
yeah, I mean, that's it right here.
Yeah, that's $8, right?
On the screen.
Okay, so now
right
calendar me up and show me what I'm going to.
And that works. That works too, of course. But and what I'm doing is playing for even further upside. I'm using the 550. I'm selling that 550 in the near term, so I'm collecting something there, and I am still long further upside, further out, and am doing it for $4.
Sell the short dated calendar option and buy the long dated option.
Yes.
You get more exposure over time and subsidize it with a contract that's going to expire inside the duration of the long position.
Yes, and so I'm playing for a bigger move.
Sell December by January, for instance.
Yeah, exactly. So the reason, and I do it further up. The reason why I do it further up, because again, if I did it at the 520 strike, it doesn't have as much meaning. And if it does make a big move, I don't make any money that way. So I do it further upside because my thought process is further up. I don't think my assumption is this is not going to move $10, $20. My assumption is this going to move back towards 550. I mean, for right now, that's a pretty sizable move.
So you'll take something purely intrinsic on the outside and play the volatility, basically.
Yep, with a little bit of time component, and I'm offsetting it by selling near term.
What do you say, Ilya? You like it? Don't like it?
I think for me, it's probably more complex than I would do. And in general, I mean, I'm not frequently an individual stocks.
You're not a ticker man as it is anyway.
Sort of animal, but I mean, let's price it out. So we're selling the 555 in December, yes?
Selling the 550, buying the 550 in December, selling
Buying
the
the
550. Yeah, buying the 550 in
okay.
December. Long that.
Okay, so we're buying the 550 in December. Here we go.
And then selling the 550 in
What
November.
are we selling?
550 in November.
Selling the 550 in November.
And so what this does too, in this case, is, say there is no deal that makes it happen, right? I mean, again, they've done a lot of deals. I actually don't expect them to come out with another OpenAI deal, but who knows? But in this case, it allows me to buy time because, again, we know how technical works, and this has a little bit of technical wood to chop to get back to highs. That might take the better part of a month, right? And so this is coming from somebody who used to just outright buy calls in this way upside a lot. Your calls are just bleeding in that December if you're long those, right? So why not sell some near-term NOV against it? We talk about expected moves. You can see the brown bar. This is a little bit outside the expected move. So this allows me to not necessarily be antsy about the calls that are losing a little bit of money every day in December because I'm short the NOV. And again, Ilya has the near-term. I actually have regular NOV, but that's fine too. I mean, you can do the NOV 28. It doesn't really matter as long as it's, a couple of, say, 2 weeks or a month in front of the month that you're long. So,
well, and I mean, we can see what just happened with the cost, right? So we went from $8 down to $3.50, and it looks like we're pretty even. But I mean, ostensibly, if the NOV expires and you still want that protection, you just roll that side of it.
Exactly. Yeah, exactly. And to really answer your question, Dylan, why do this? This is something that this is me maturing as a trader. Again, I just used to go just buy upside calls because I'm like, this is going up. I know it. It's going to happen. And maybe I'm right.
Straight crazy pants.
Yeah. But who knows when it happens, right? So this just allows me to be a lot more patient about the trade and not be wondering every day, what should I do with these upside calls in December that I don't have anything against, right? This is what that does.
What becomes an interesting thing, and I mean, this essentially just becomes a capital efficiency thing. So it basically gets you into the 550 December calls at a price that is much, much lower. Worst case, you have to put something else against it if basically the move doesn't happen by the end of November, in which case ostensibly then that call just gets expired and you just got in for 350 instead of 8.
There you go.
So as far as capital efficiency, as far as getting into a 550 call on the cheap, this does that. For me, I like directional. I use call verticals and ETFs on big kind of benchmark assets to kind of mitigate risk that way. And I'll usually go further out than 45 days. If I can get some 60s, I'll do that. And that's really just to dilute my exposure to upfront delta, to give myself more time, and to lower sensitivity to whatever the underlying does, so that I'm managing risk that way. while being directional. And speaking of, one thing that isn't being directional here, but maybe soon, and I'm in it for now, is gold, which has apparently gotten.
You're long gold here after the.
I'm short. I'm still short.
All right.
I'm still short. It hasn't shown me that it wants to break back into here, and so it's still kind of in this whatever this sell-off is.
Yeah.
But it's definitely become stuck here a little bit.
Call it 4,000. Let's call it 4,000.
Let's call it
Yes,
4,000.
for sure.
Do we think that there is more downside here? If what we're saying is we're going to have some sort of a stronger dollar, the Fed is not as antsy about going again in December. The markets have clearly walked back a good bit of that. In fact, if we look at the CME Fed Watch tool here, we're looking at a likelihood of 67% that we're going to get the cut in December. Still better than even, but down from 94 a week earlier. So clearly there's been a meaningful shift in the odds here by a significant amount. That we're going to stand still in December, 32.5%, up from 5.5%. So big shift in the wake of the Fed. And the vol here is pretty elevated, let's say, at 41.7. Do we maybe want to sell some calls here? Which is, by the way, so I have exposure here two ways. I'm selling call spreads and I'm outright short the 1 ounce future. So I've done both. At 41.7 IV, seems like selling calls might be one way to go about this, looking maybe for even just a swing down into here, even something modest. Thoughts on this?
Well, I think I've said this before more recently, but I mean, it's a very different trade from October 16th when it was making the run to the highs, right? I think the 16th was the day I pounded the table. It's a very different trade now for a lot of reasons. I mean, obviously the action that we see now, but the other thing, the skew is to the upside once again, which is typical for gold. And it wasn't to the upside when it was making that move on the 14th, 15th, 16th. It was flat skew. And that was the one thing we talked about. And you could kind of tell like something was about to happen, probably a move to the downside, which it did. Now it's a whole new trade again. And if I really am indifferent on price at this point. I mean, I have nothing on in the actual future. I have some ETF plays on, but if you really force me to pick a direction on a poll, I'd probably say a month from now it's higher, I would think. But does that include some dip in the meantime? Maybe it does, but you can see it's struggling at 4,000, and that's because there's a lot of people at that level. I mean, clearly buyers and sellers. I don't know which one's going to give way yet, so it's hard to tell, but there's definitely something going on at 4,000.
Yeah, I mean, you could give yourself room selling these calls at the money, let's say, and give yourself room out to 375. You're starting to get pretty close to 1-to-1 risk reward, which would be pretty great. Even if you tighten this up, I mean, you can get real close to 1-to-1 here if you wanted to take a flyer and just look at just vol extraction.
I mean, on a normal day, in a normal world, I would agree with you that gold is more likely to be lower than higher in a world where the U.S. currency has tailwinds in its favor. And for that matter, the most legendary investor in the world is long bonds and blah, 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 blah. My issue is I really don't know why gold went up as much as it did in the first place. I understand there was the whole sort of debasement trade discussion, which you did a pretty good job, Ilya, of refuting. And you asserted an alternative hypothesis, which was the the decoupling trade, the
The
long,
multipolarity idea.
the
Yes.
long multipolarity with gold as the bridge currency.
Yes.
But even that, I think, is somewhat compromised by some of the recent deal making and whatever between China and the U.S.
Yeah.
I mean, and so because I don't, I mean, my question is for me to really come into an opinion on what gold's likely to do from here, I would need to get a better understanding of why gold did what it did between, let's say, August 1st and October, whatever that is, 14th or 15th.
Mm-hmm.
I don't know why gold went from 3,200 to 4,000 as fast as it did. And so,
I mean, for me, it really is that multipolarity idea, largely around, and sort of the way I think about it is, here is October 10th right here, right? This is that Friday where the president spooks the bejesus out of everybody with his "we're going to hit China with 100% tariffs" thing. And you can see that here. So, I mean, that's this right there. And obviously, since then, stocks have righted the ship a little bit, but we can see here, okay, that's that day. And gold doesn't ultimately make up its mind that day. That's not terribly unusual. Perhaps waiting to see what China's going to say. China said all kinds of feisty things. It didn't look back until it ran all the way up here into the sort of approaching the mid 4,000 area, and then had this massive reval. So
but there wasn't even an obvious cat. I mean, because it was Jamal, yourself, and myself were on together on that green bar that was literally the day before gold came unraveled, and we spent most of the hour talking about how gold is due, gold is due, gold. I didn't even have a position on, and I'd made that sell off, but we did have the discussion about how can this keep going, and blah blah blah. And sure enough, the next day it got, flipped over.
It got whacked, yeah.
But if my memory serves me, there was no. It wasn't like there was some super deal between China and the U.S. or some super deal on rate. Like, I don't know why gold rolled over that day, other than it was coming. It was overdue.
It was overdue.
Yeah, I mean, it looked overdue.
But I could say it looked overdue the day before.
Right, but there were some things that came together that day. I mean, certainly you had a little bit there already around Bessent was out there saying, listen, this is not a thing. We're gonna have a deal. Trump is gonna meet the guy. It's gonna be cool. Nobody freak out. That was already starting to get going at that point. And if we take a look at some of the kind of recent developments, in particular, I would say speeches from Fed officials kind of around then. The one that really stood out that day actually was a speech from Waller. And sort of, there was a bunch of speechifying around then, but the Fed was already starting to signal like, hey, whoa, calm down. We're not doing all of this easy. This is not.
So you're saying the gold rollover is triggered by anticipated adjustment in Fed rate cut expectations, or you're saying,
I don't think so. I think that was a helpful thing, but I don't think that was the thing. I think the thing was Bessent and company, with Trump echoing them, were walking back the China spook.
The multipolarity walk back.
Yeah.
Yeah, I think it was just overstretched positioning. I mean, you got to remember back in that day after, I mean, again, it was heading up into the weekend. It fell on that Friday. It went back up again on that Monday we were on. And that was a day where I think the previous 3 days, it was one of the top 10 as far as options trading on GLD and all these other things. I mean, it was a layup. I mean, look, I'm going to call it now. I hardly ever say that, but that one was definitely a layup for sure. The skew had changed. It was clear there was about to be a change. Did we know it was going to be $300 move in one day? No, but we knew it was going to be some type of move.
But I mean, I would say if the, I don't know what the date on that is, the 15th or the 14th or whenever that sell-off was, if that was a layup, I would say picking a direction at 4,000 is the opposite. Is I don't see how you
Exactly.
can possibly do it with confidence.
I agree.
Either, if anything,
I feel the same.
This may be sort of a classic, like, I mean, I just don't know. I have no idea how to.
Well, so that's where kind of selling calls with vol at 41.7 is where my head would go if I didn't have exposure already. And again, I'm already selling calls here, and have been basically since back here. I missed this chestnut right here. That this was not where I got in, and had I known about 1 ounce gold futures, which I was completely oblivious to existing when this was going on, that you could see on a shorter term chart here, in sort of on the way into this sell-off, you start to see kind of the architecture of where after hours you could get something off here on the way down. It's not the most obvious, but right here, for example. But I managed to get in down here. And so this is where I'm short calls. And ostensibly, if I didn't have anything on, the only thing I would do here as we sort of hug the top of whatever this range is would be to sell calls. It wouldn't be an outright just short.
Yeah, it's tough at this point. Like I said, there's a lot going on at this 4,000 level, and I just kind of want to, I want to wait it out. I just want to see what it's going to do. I wanted to make a decision one way or another. I want the other layup trade. Honestly, this is what it boils down to. I want the other layup trade, and right now,
isn't the layup trade right now long dollar?
Yeah, I think it is. It's certainly more layup than half court for sure, but that one is going to take some time, right? Similar to probably the Microsoft trade we outlined earlier, and the Meta trade.
Yeah,
might take a little bit of time. This one was, things were just getting to a fever point. You guys remember? We pulled up an hour
on it.
We pulled up the news. And then it was talking about why you should be in gold right now. I bet if you pull up gold stuff right now, they won't say that. That was the other part of the equation to the trade.
Yes, I mean there was definitely something of a sentiment extreme. You could see it in the conversation. Before we run out of time here, while we're on this subject, I want to take us to Bitcoin here, which is also kind of hugging the bottom of its recent range. Now, I've been short into this, but from up here. And so I'm kind of trying to see now what this thing is going to do.
I mean, isn't Bitcoin at this point nothing more than some sort of a measure of speculative sentiment? Basically, sort of risk on versus risk off. That it's.
I mean, I would argue it's been that for a long time. But
it's
yes,
not a store of value. It's not a currency alternative. It's nothing. It's just the sort of purest measurement of the psychology of the marginal speculator.
Yeah. Steroids-addled NASDAQ, if you will.
Be that as it may, it sure has a lot of money being thrown at it right now, whether it's the actual crypto itself or the future or the ETF. There's a whole ecosystem around it now, right? And so as a result, it's I think I'm glad you brought this up because it's in an interesting area. I think you can see it's been trading between 100 and trading water between 107 and 110,000. And I think it's a good one to bring up because something's going to happen in here soon. Part of my feeling, what I would like to say, no, and this is a good one too, because to Dylan's point earlier, gold. The other thing that troubles me is the relationship with the dollar seems to have broken down. This one, the relationship with the equity markets is very much together, and that's the weird part.
Too, yeah.
Well, it's broken down, but that's the weird part because is it actually breaking down or is it just holding? is it waiting for the markets to actually fall and then it's going to fall? Or if we have a situation where market reaches new high, this thing is going to bounce back up? That's really what I'm trying to wait and see. And I don't feel like predicting. I want it to tell me.
What's interesting is sort of asking the question, which market does this have a relationship with? Because if we look at, obviously, S&P, it looks nothing like this. If we look at the equal weighted S&P, it looks much more like it. And so, and if we look at the equal weighted NASDAQ here, this certainly looks a little bit better. So you sort of wonder if really what Bitcoin is more so approximating, and again, they're not perfect, these charts, but the S&P, unlike the tech-skewed sort of headline index, this equal weighted version is basically sitting at the bottom of a range that has held since back in kind of mid-August, let's say. So right around there is kind of that mid-August bottom, and we're basically there. If we look at Bitcoin here, I mean, that's mid-August right here.
I would rather be long Bitcoin than long gold.
Interesting.
I mean, you know, I would be long Bitcoin, long Microsoft. I would do it in this order. Long dollar is my most confident opinion.
Mm-hmm.
Long Microsoft and Meta, a near second. Long Bitcoin, a distant third. Gold, I am clueless. Haven't the slightest idea what to do with gold.
Why Bitcoin? Does it feed into the supernova
Just
theory?
because I think Bitcoin's on a low, like it's at a low, that it just on a price level basis, that gold. I think there's a reasonable case that Bitcoin can make a run at $150,000 by the end of the year. I mean, it took that run to $1.25.
Mm-hmm.
It got face pounded on the deleveraging in October. And it's sort of consolidating here in the just north of 100, $1.05 or whatever it is, $1.06. And I just feel like there's a level there, not to go all technical on your ass.
I mean, there does seem to be some kind of a range bottom down here. Now, I'm short via IBIT, and I got in around here, and I'm looking to see what this is going to be. But something's going on down here. Something is attempting to hold, and IV is not the worst. I mean, 51.6. So if you wanted to be a seller of premium here in IBIT, which is a smaller contract size than any of the Bitcoin futures or anything like this, I don't hate it. I'm on the other side of it, but if I was looking at this with fresh eyes and not waiting for this to do something, I don't hate it. My thought process in connecting this with the equal weighted S&P is that maybe what this is in fact a barometer for risk. And the headline indexes are just skewed by tech holdover. And this is telling us something, but unclear if that's actually the case. I wonder, though, if this were to break, if risk wouldn't follow down.
I think if for some reason, which highly unlikely, if equity markets break, this definitely breaks down hard.
Oh, yeah. Yeah, I think so. I wonder if this one ends up...
Are you willing to be short? I mean, we're out of time, but are you willing to be short NASDAQ or short Bitcoin? I mean, you're already short Bitcoin. So.
I'm short Bitcoin. I'm short the S&P through SPY verticals. I am not touching the NASDAQ here. It looks for now like it wants to hold up. But I'm short a little bit of SPY. This looks a little bit stronger. I'm probably going to want it to come under the recent range and then maybe look to do something if that occurs. But that is a conversation for another day because overtime is out of time here. Thank you, gentlemen, as always. A spirited conversation. We actually did quite a bit of trades setups in this very quiet, seemingly opportunity-less market. Not so devoid of opportunity, as it turns out. Stay right where you are, everybody. Macro Money is coming right up, where we're going to dig into the non-event risk, event risk week that is in front of us from a macro perspective. And we'll be back for this show in a mere 23 hours. Sit right where you are. We'll be right back. So, did Fed Chair Powell break the stock market after all? That's what we are asking here today as the markets take a big wallop. We're going to try to figure out what happened and what it means going forward. This is Macro Money. I'm Ilya Spivak, head of global macro here at Tasty Live. And what we'll start with first and foremost is a look at the price action and what it is that these markets showed us today. Because, of course, as we'll find, there is seemingly more in the price action than there is in terms of its justification. There is very little event risk that stands out right here to show us how we ended up with this sea of red. And it is risk aversion seemingly at its most classic. So stocks, of course, we see are down. No big surprise there. Significant losses for the S&P, significant losses for the NASDAQ. But and if we might as well make note here right from the start, Bitcoin back apparently to doing its amplified risk sentiment thing, where when stocks go up, it goes up more. When stocks go down, it goes down more. That seems to be back to where we've come here, and down more it really is. Bitcoin off over 7% here. As we look elsewhere, the mix starts to get really interesting because whereas we have had a significant pickup in yields over the past week, and more on that in a moment, here yields actually come in some. And perhaps what's most interesting about this is they come in some most at the long end. We can see the 2-year basically neutral here, generally unchanged. It's at the 10-year where we see a downtick of almost 0.5%. And that seems to give all of this a little bit more of that risk-off sort of vibe, where it's not so much that it's this catalyst or that catalyst, or where we've priced in this or that for the Fed or whatever it is. It's more like capital is flowing to defensive assets, to those assets that typically thrive in a defensive environment. When we look at, incidentally, the decline in gold, it becomes very clear how not a safe haven it actually is. People talk about gold as a safe haven because it oftentimes goes higher when yields come in, which in turn happens in periods where the markets are somewhat defensive. And so there's an incidental thing there where stocks might go down, there's risk aversion, bonds go up, yields come in, gold might go up in that environment because yields are lower and it yields nothing. But that need not be the case. In fact, all of 2022, say, when yields were going up as stocks were declining with the Fed rate hike cycle, gold was falling right in tandem. And what we see, of course, in the most recent weeks and months is that gold is kind of decoupled to some extent from both the dollar, one of its main foils, and yields, the other one, largely around this idea that it is more so a kind of multipolarity asset, a kind of go-between. If the US and China, say, were to drift apart, if deglobalization were to become more entrenched, and you were to look at more of a confrontational relationship between the two major powers, and they had their own economic spheres, as China has attempted to carve out, especially in the wake of the sanctions that the world has taken against Russia following its invasion of Ukraine and sort of the display of economic weapons there. The go-between asset for third countries that might want to do business with both silos, as it were, the China-led one and the US one, that's emerged as gold. Now, whether those silos actually occur, who's to say? But the speculation is certainly there, and the animus is certainly there. So as we look at what gold has been doing, it's been less linked to anything in terms of its more classic drivers, and has, in a sense, become the same kind of speculative vehicle that stocks are, just for a different story, for a different narrative. And so we see, as markets apparently have gone to unwind their exposure to the major themes of recent months, gold is down with stocks, not up because it is acting as some sort of a defensive vehicle, but rather because it has speculative froth to clear of its own. The euro down as the dollar gains. And interestingly, again, to give this an even firmer risk-off sort of thrust, the yen is up. The yen is a kind of classic beneficiary of risk aversion in environments where essentially the market becomes almost correlation one defensive, where one kind of universe of assets is the risky universe is going down, and the more defensive, more sort of liquidity haven universe, like the dollar, like US Treasury bonds, when that's going up, you typically get a situation where there is a defensive unwinding of carry trade exposure, and that's oftentimes financed by de facto being short the yen. So when people are unwinding that exposure, you oftentimes will get this this kind of a dynamic where the yen goes up and the dollar goes up. The dollar goes up generally on sort of liquidity haven grounds, as do bonds. For the yen, it's more a story of just the defensive mood being an unraveling of yen short exposure and a sort of buying back of that exposure that gives you this rise. Nevertheless, the dollar is firmly higher here across almost all of its major counterparts, and certainly the euro story sort of captures at least the general sort of thrust. And so naturally, as we see this kind of aggressive risk-off thing, the question becomes, well, what in the world happened? And perhaps the most straightforward way to approach it is to sort of look at what didn't happen and go by the process of elimination. Now, to be sure, markets have tended toward a clearly defensive sort of thing in the wake of the Fed policy announcement last week. In fact, we can see here that when we look at overall performance last week, stocks actually edged out a little gain. We see, of course, in the rise in yields what ultimately ended up happening, but all of this looks much more staid, especially on the risk sentiment front. Bitcoin is neutral, so you don't get the kind of panicky thing that you start to notice when you simply look just after the Fed meeting. And clearly, there is a difference in tone. since that Fed meeting, stocks are down, yields are up, gold is a little bit lower, but more importantly, the dollar is significantly higher, and Bitcoin is way off. All of which seems to reflect this idea, as we've talked about here at length over the past week and a half, that coming into last week, the markets were essentially priced for perfection. They had three pillars that were holding them up. Number one, the Fed was going to deliver a rate cut and probably not say anything off-putting about another cut to follow in December. The second, that tech earnings were going to go generally okay because tech results had been outperforming the overall market, with revenues and earnings growing faster than market average. Tech earnings were growing at about 22% The S&P 500 average was around 9. And the third thing, that the meeting between the U.S. President Donald Trump and Xi Jinping, China's president, was going to be generally cordial, that there would be a kind of walking back of the immediate hostilities where rare earths would get unlocked at the same time as Chinese companies, subsidiaries of U.S., let's say, monitored and listed firms for sanctions, that they would get essentially to go free. That was part of the recent escalation. And that essentially we'd go back to where this thing stood before things started to get off kilter in early October. That essentially we'd walk back U.S.-China relations to October 1st, give or take. As far as China went, that worked out. There was a sort of rubber stamping of the intent to cool things off by the two leaders, and everything generally passed as markets expected. On the earnings front, a little bit of a miss for Meta, but generally nothing untoward there. In fact, if we look at the way that earnings so far this week have materialized, the big names are largely already out. Palantir, a little bit of a beat. Same thing for AMD and for Uber. Those are kind of the big market cap names, and not really all that great as far as the price response. Certainly not helping with what we're seeing here as these markets sell off. And as we look at what then seems to be the problem, it was the Fed and Fed Chair Powell's sort of grenade throwing at the press conference following the policy announcement. The cut appeared exactly as anticipated. There was nothing ultimately that spicy in the statement, although the Fed sort of bemoaned the absence of timely economic data around the U.S. government shutdown. But we can clearly see, looking at what's happened with the probabilities for December's meeting, that there was a sea change in expectations. Right now, we're basically 70-30 in favor of a cut. That's obviously a huge change versus the over 90% likelihood just a week back from today. So that Powell came out and very clearly said, look, you all seem to think that December is a foregone conclusion. Let me be very clear, it is not, and far from it. And the markets haven't looked back since. Again, here is what we've done since he said those things. Stocks down, yields up, gold down, dollar up, Bitcoin off significantly. So clearly, whatever is occurring here, the Fed was the breaking point and perhaps need not have been. If any one of those three pillars that we just listed had generated something other than what the markets were expecting, you might have expected a similar thing. And that seems to be how we end up with this ongoing slide today. It isn't so much that there was event risk and this is still the lingering response to whatever that event risk was. It's more a sentiment shift whereby the market started last week seemingly priced for perfection, and when that perfection didn't arrive in whatever guise, there was likely to be a speculative reshuffle, and seemingly that's exactly what we're looking at here. Now, looking at the way these Fed expectations have evolved, even since yesterday, we can see not a big change. So it's not as if this sell-off now, as opposed to the drift in risky assets yesterday, seems to have been somehow catalyzed by a further unraveling of rate cut odds. In fact, they've actually ticked up a little bit today versus where they were yesterday. If we look at what's come from the economic data side of things, we didn't get jolts. The government shutdown continues. We did get the ISM manufacturing PMI numbers earlier in the week. The services sector component of those surveys is coming up tomorrow. That is by far the most sort of potent indicator of U.S. economic activity in the absence of government data, because of course the services sector is by far the largest employer and the largest share of the economy, about 70 odd percent of the overall economy and maybe 80 odd percent of employment. No big news from the RBA overnight. They keep rates unchanged, and ultimately that fades into the overall narrative. The services side here for ISM expected to tick up just a little bit. It was at standstill in September. As ever, these are centered around 50, where that's neutral. Above 50 is growth. Below 50 is contraction. The further you go above 50, the faster the growth. The further you go below 50, the faster the contraction. So if you go from 50 in September to 50.7 as expected in October here, what you've done is you've increased the pace of growth slightly from basically nothing to a little bit of something. When you compare that with what turned out to be an unexpected acceleration and contraction on the manufacturing side, you probably end up with an economy somewhere idling. Because the outsized contribution of the service sector would sort of tilt you in the direction of that being weighed higher in the average than the manufacturing side. So because of that, and because that side's the one that's ostensibly growing, you'd end up somewhere near standstill, give or take, taking both of those two together. Looking at what's then coming up later in the week, really it's just the University of Michigan Consumer Confidence report that is slated for Friday. Now, maybe we'll get a breakthrough in this government shutdown and jobs data actually does come out, but it's unclear. And at the moment, there's no sign that that is where things are going. So for the moment, this is what we're looking at. And the most interesting thing here ends up being that we were looking at sentiment really just operating as a function of inflation, where from the beginning of 2021 until really the beginning of this year, when inflation expectations rose, sentiment deteriorated. When they fell, sentiment improved. And we can sort of follow this narrative very clearly. Here's inflation expectations accelerating until the Fed really gets serious, and sentiment is declining as that's occurring. Once the Fed really starts to hike rates and clamp down, inflation expectations decline, sentiment improves. That continues until the beginning of this year when, of course, inflation expectations surge thanks to the tariffs that have been unveiled, and sentiment declines again. Once the sort of worst of the fears around Liberation Day and sort of that early April kerfuffle start to fade, sentiment improves a bit, but now what we've seen over the past 3 months is something else entirely. Sentiment seems to be deteriorating even as inflation expectations cool. And that's suggesting a defensiveness about the consumer that's new and interesting, perhaps anticipating some kind of level of exhaustion and some kind of more significant headwind for consumption. That, of course, would be very concerning because, after all, 68% of US GDP is household spending. Now, this is where the rest of the week becomes an exercise in what is the narrative that drives. So, looking at Fed policy expectations, to the extent that what we might see out of this data moves the needle here, maybe we manage to check whatever sentiment shift is now underway. But the markets are already deeply on the dovish side of Fed policy expectations. They've got 63 basis points in easing on the menu for next year. That's at least 2 cuts and about 50-50 on a third. Looking at what's going on for Fed's policy expectations as they see it, it's a measly 1 cut. So if we consider then what this data might show, if it ends up disappointing, maybe we get a little bit more by way of Fed rate cut speculation. But even with the recent unraveling, December is still better than even odds. And next year is already more dovish than the markets were hoping for the Fed to endorse. And clearly they've not endorsed it. So what we see here is, despite expectations seemingly starting to moderate a little, at least after last week's shift, sentiment is nevertheless looking like it's unraveling a bit, and importantly, a bit. Obviously, there's a commanding advance here that's still very much there, but clearly the price action is noteworthy here, and the dollar continues to revel in a recovery as we get less dovish of a view against the back of all of this. We end up with a dollar that continues to bounce from these lows in mid-September, incidentally lined up with the Fed's meeting that month, where it retested the bottoms in July. Notably, it was in early July when the dollar seemed to hit a low. It hasn't set a fresh low since. And that seems to be very much a part of this overall story. Now, U.S. economic data, just judging by the tone of what's been going into the Atlanta Fed GDP Now model, that's the green line there, it seems to suggest that the U.S. economy is actually looking like it is accelerating. That would line up with at least some of the recent data. For example, the S&P Global PMIs that came out just a bit over a week ago. And we can see that even the consensus view that's been sort of shaped by what data there has been, at least going into October, even that gave us a potent revision pointing higher to what markets are expecting. So we, if anything, might get the kind of data this week that actually makes rate cuts less likely if the economy seems to be getting a perkier. And of course, with sentiment the way it's set up and the response, again, that we've seen since the Fed told us that the scope for easing was not as great as anticipated, that doesn't bode well for risky assets. As far as exposure, I still have my short gold exposure, both via the futures and by selling a call vertical here. That's working. Still long the US dollar, short the Aussie, the pound, the euro, the Canadian dollar. Still have my long-term exposure to Brazilian markets via EWZ here, which was one of the few things that didn't work today. But of course, this is a longer-term view. There's still all kinds of time in it, and it's well on the profitable side of things already. So we'll see if that continues to be the case. Short Bitcoin through a put vertical, short the S&P through a put vertical on SPY, the ETF, long the long end of the bonds through call verticals on TLT. That seems to have found a helpful bottom today. We'll see if that continues to hold. And short a bit of crude oil through a put vertical in USO. That fell with general risk aversion today. We'll see how that continues to evolve going forward. And that is macro money for today. As ever, we are here Monday through Thursday, right after Overtime, a show I usually co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and where things might go therefrom. I'm also writing for the News and Insights portion of tastylive.com, commenting at Ilya Spivak on former Twitter and on Blue Sky. If you're watching this on YouTube, like and subscribe. Macro Money is back tomorrow. Happy trading. And we are back. This is Overtime. I'm Ilya Spivak in San Francisco. That's Dylan Radigan in Milan, our returning champion with a very fancy sweater, Mr. Jamal Chandler in Chicago. Gentlemen, do we have anything here? I mean, what is this today? Were the markets open?
Jamal?
Easily one of the most boring day in well over a month. Quiet day, if you will. I mean, there's really not much to speak of. Markets seem to be calming down just a little bit over the last 4 days here. I mean, what can you say? Honestly, it's probably needed. It's probably what's best. But I have to walk back my comments about this is the greatest market alive because it has been up until today.
You're gonna abandon it after 1 day, Jamal? Come on.
It needs to keep going, Dylan. It needs to keep going for me to continue to call it that. Okay, this is not okay. It's not okay.
How many times do I have to say buy the dip?
Is this the dip to buy?
Yeah.
Every dip is a dip that you buy.
So,
although this is not a dip, this is not a dip. This is
not a dip. Okay, so this doesn't count as a buyable dip.
Just a day off among friends. Just relax.
Got it.
What do you not every day can be a trip to Disneyland, okay? Sometimes the market opens, the market closes, prices, they didn't change that much. Everybody can calm down.
So sometimes you just go to 7-Eleven and get a Slurpee instead of going to Disneyland that day?
Sometimes you get a Slurpee and calm down.
You don't get the hot dog though. Listen, word to the wise.
Never get.
I don't think I've ever gotten a hot dogs from 7-Eleven.
No. My college self reaches from the annals of time and says, "Don't do it."
I have to admit, I was once slipped an edible, and it did result in a hot dog at 7-Eleven.
I like where this is going.
It resulted in no more edibles and no more hot dogs at 7-Eleven.
The annals of time they call. I would point out, here we have the S&P 500, and there is the beginning of last week, which would be the glorious gap here and continued supernova-like situations. Then there was the Fed, and then there's everything else. So something happened right here, clearly. And I would argue it's the same thing that we were talking about at the beginning of last week. This idea that the markets were priced for perfection. They had three pillars that they were standing on. The first was that the tech earnings were going to be fine. The second was that the Fed was going to endorse their pricing for 2 more rate cuts, one in October, which obviously now we have, and another one in December, and that the Trump-Xi meeting was going to be fine because Bessent was already out there. He already said everything is cool. These two just need to rubber stamp it. The rubber stamping was commenced. No issue there. The tech earnings were, for the most part, fine. Meta obviously missed. Other than that, for the most part, okay. The Fed threw a grenade out there. And we can see it.
An unwelcome grenade, I might say.
An unwelcome grenade.
No,
where Powell came out and made a whole show.
Made a whole big show. No need for that, sir.
Big show. Came out there, pounded the podium, did the stuff.
Said a little hear ye, hear ye.
And what do we have to show for it? The market sells off the very next day and has been listless since.
I mean, listless since. You speak as if it's some sort of epic sojourn, and yet really we speak only of a few days.
This is certainly the case. We have a sell-off in the wake of the Fed and then not follow through. So the markets are not, as it were, panicky or anything of the sort. They are, however, unsure of how to proceed next. And this is an interesting thing because today we actually get a little bit of economic data. It's not good as such. The ISM manufacturing index comes out, and it comes out weaker than expected. A contraction in manufacturing activity was expected. They got the contraction, but it was a faster contraction than expected. Not really great signs in the internals of that report. Employment on the manufacturing side shrinks again, albeit at a slightly slower rate. New orders fall, albeit at a slightly slower rate. Inflation cools, but is still very elevated relative to even recent history. Although, in fairness, since inflation peaked earlier this year in this survey, it's down a lot in terms of pace. It's still rising, but at a much slower rate. So, still high by historical standards, not nearly as high as it was earlier this year, rising, but slower. So, kind of a mixed bag. Market ultimately doesn't do anything with it, but when the numbers come out, you can see that right here. See if we can pull this up to a shorter term chart. Okay. So, it's not like we don't notice, but we also don't really go anywhere. So, it's an interesting sort of thing. The markets don't love these numbers, but ostensibly they also don't hate them, and we're in kind of a weird sort of no man's land still. And of course, we're still on shutdown. So maybe we'll get an NFP number at the end of the week. Maybe we won't. We'll get a service sector ISM number on Wednesday. We'll get consumer confidence from the University of Michigan on Friday. The earnings calendar is kind of slow, barring Palantir, which we'll get to as soon as it comes out here. Anything on this standstill, gentlemen, that gets you to think that there is a decision to be made?
Standstill in the government, or you just mean standstill markets?
Are we doing anything with this?
Not really. No. I mean, it's not interesting enough. We're just kind of watching. I mean, we're watching from the sidelines. The one thing is that we noticed from early this morning when Tony and I were on, the VIX futures contract, the November contract, was 19, like 1910 early this morning. It did sort of fade towards the end of the day here because basically nothing happened. And I mean, I think that's kind of your cue. Like, not much is going on. There's no reason to really force much of a trade, if you will. I mean, the really only thing is this week earnings slate that's coming up right now. So it's and I say week because again, a lot of the big ones have gone. I mean, this is one of the last big-ish ones, but again, this is not a Mag 7 name. This is just one of their friends. I think the other big news is for today is look, pick a name from the tech space. Pick a big name from the tech space and get out a blank check and write in however many billion you want and add OpenAI onto it, and that's been the theme for the better part of 2 weeks. Every day we come in, there's a new deal with something involving OpenAI and somewhat of billions of dollars. And today that was
they're building quite an ecosystem here. Palantir I have on the screen. It had a little bit of a pop here clearly as it came out. Not really holding yet, but we'll see. It's early yet. Results were a little bit better than expected. 17 cents a share expected. It was 21. Revenue of 1.09 billion expected. 1.18 actually. So 24% beat on EPS. 8% beat on revenue. Not bad. Clearly, and the markets like it clearly. But Jamal, to your point, this is not one of those $1 trillion market cap situations. We're talking about about 500 billion ish market cap. Now, in fairness, this is the biggest name of the week as far as kind of heft.
Well, there's AMD this week.
Market
AMD
cap.
this week. AMD is probably still there, right?
AMD is this week. It is a smaller name, slightly. 380, almost 381 billion market cap. But obviously a big name in the kind of universe of tech names.
Yeah.
And AI adjacent names.
True.
Qualcomm is also on Wednesday, as long as we're sort of looking at that. Maybe if we care, Robinhood. That's on Wednesday too. But I'm kind of struggling to find something that's going to necessarily move the needle here, like the names that came out last week could have, and they didn't. Not really. I mean, if we
how about, can I offer you a different point of view, if I might?
Yes, sir. Of course.
It's obviously not going to be an earnings-driven week.
I would think.
Nor is it going to be a data-driven week because there's no data because the government shut down, blah, blah, blah. And we know where the Fed stands, which is less rate cuts, not as soon as you think, just calm down.
Right.
Which leaves us with two sort of obvious trades from my humble and conservative and reliably, inconsistently accurate perspective. One, you got to buy the U.S. dollar. What the hell's the matter with you? If the Fed is doing what they're doing and the dollar has been jammed up as hard as it is, and I know the dollar's already performing, I feel like long dollar trades are an intelligent individual's point of consideration as long as this new Fed posture exists. In fact, I would even, as you twizzle the dizzle there around the end of that chart, I believe that ties directly to the come to Jesus speech from the Fed chairman.
It most certainly does.
So rather than sort of noodle around in the sort of unknown and unknowable world that is all the financial markets, let us isolate on a few things that we can identify. One, the pot odds of a stronger dollar have gone up substantially. The dollar has gotten stronger meaningfully in the most recent days, and there's reason to believe that it could continue to get substantially stronger from here.
I would concur. I would in particular point our attention to the euro, which at the end of last week made something of a technical break through what was support and ostensibly opened up some room for extension. Not all of them look like this. So again, here's the euro. Here it is breaking lows last week and exposing lower levels. If we looked at the pound, where, by the way, we have a rate decision this week, it also seems to be grinding through something or other. Although, in fairness, if you look at the spot level, and this is the most convenient thing ever, that we now have spot on these charts, and we can look at that as well. If you looked at spot, it's not quite breaking through yet. So when spot and the futures don't agree, I usually default to what spot is doing as far as a technical kind of consideration, because it's the more liquid thing. And the futures sometimes have sort of contract related nuance. So I typically will look at spot to see if that's got the break. Pound is maybe not there yet. Aussie is maybe not quite there yet. Here's the Aussie right here. It's maybe still holding some levels, but the euro looks very much like it's crossed the line here. And so there are opportunities on the board here to be buying dollars with solid risk reward.
So again, in a world of unknown and unknowable, trying to focus on the things that have some variable, some at least logical basis for the trade. The dollar's been on a price extreme to the downside. The Fed has repositioned itself in a way that is dollar positive. I would also add to that, and you can take it or leave it, but recent news headlines that suggest that Berkshire Hathaway has been a mega buyer of U.S. Treasuries, which of itself is a dollar long position. So, the other thing, if you're long dollar, maybe also long bond, which I know may be somewhat contradictory to the recent Fed commentary, but I don't think that the Berkshire Hathaway crew is a bunch of idiots.
Yeah.
And so I don't mind entertaining a bond position, especially in the context of the recent sell-off. I mean, a sell-off is a strong word. The recent pullback, I'll call it. So I don't mind long dollar. I don't mind long bond.
So far, so good. I mean, I'm already long the bonds. I bought them when there was the breakthrough over here. And then when we pulled back to retest it, I added some. So, and I'm doing this through TLT verticals, again, to keep size contained. As ever, I'm constantly attempting to reduce my exposure to big sizable things in these weird markets. And so rather than using ZB or even 30Y futures or 10Y futures, which would be the smaller and the rates-based futures, I'm looking at the ETFs using call verticals and keeping size contained, keeping risk defined that way. And if we see a little bit of a wiggle higher here, once we test whatever this congestion is, I'll probably add again.
So, again, because we can swim around in this equity mess till we're blue in the face, and who knows what's going to happen. But I would be, again, call your attorney here, because I don't know what I'm talking about. So I just want to make that extremely clear. But considering whatever my attorney and your attorney might come up with, and considering the fact that I'm explicitly telling you I don't know what I'm doing, I am telling you I believe the dollar is a lovely opportunity for any young or old man or woman. And I believe similarly a long bond position is worth consideration. The third thing that I might venture in this vacuum of information post Mag 7 earnings would be Amazon. I continue to harbor great hopes for Amazon.
You were all over that one.
In the scope of the Mag 7. Now, my hopes have been somewhat diminished because you can see the price action that has occurred, which
can we just pause for a second and say you wanted this gap?
Did I not, as a man who needs a lawyer to protect him from any of his opinions, and you, my lawyer, should call your lawyer, and the fact that I don't know what I'm doing, but I would like to say, bullseye, my friend. I call that one dead to rights.
Weeks in advance.
I've been saying
weeks in advance.
I called that turkey right there.
Off this bottom, by the way.
Pure Radigan glory right there.
That's
when you buy,
I move we rename this the Radigan from the former silver situation.
I appreciate it. And when you buy your lady friend a new car, just don't forget to send my lawyer a thank you note. As long as I'm not held liable for future losses, I don't have any interest in your and I hope you enjoy the money that you may have made, but do not hold me to account.
Past performance, as we know, not indicative of future results.
Any performance is not indicative of anything. Okay, it's all uncorrelated, as I said. Don't know, can't say, but I did say Amazon's is the sleeping turkey out there, and that is correct. I
mean, to the point where you said they were due for a big gap, and we have a big gap.
As if I was a soothsayer in the piazza of Marrakesh with a cobra.
Do they call it a piazza in Marrakesh?
I mean, whatever. I get mixing up my languages.
We're picking up what you're putting down.
I think you understand what I'm saying, which is that I made a prediction and it came true, which I think is
yes, indeed.
Sort of leave it. We'll leave it there. But for what I would say now, I guess I'm a little less Amazon positive as a result of the gap that has henceforth occurred. But I still do love that dollar, and I don't mind me some bond. As for the rest of it, you're on your own. I can only do
Chandler.
You know,
let's come to you. You've been sitting there quietly. Let's come to you and get.
No, I'm enjoying this, man.
And get a similar readout here.
Well, but
in the absence of news,
call your lawyers and make your disclaimers, and then tell us your predictions, sir.
I'm sitting here because I'm happy. This is great. I mean, it's true. I can say that I remember when the Radican surge was predicted. I heard it 3 weeks ago.
Yes.
You've probably been saying it prior to that, but
we were here. It was said.
I didn't know if it had been said prior to me being on, but yeah, you're right. That was when we talked about it. And it was a huge move, and it makes me say, and it kind of coincides with what I was saying earlier. It makes me say, what's the next name? What's the next big name that's going to do a deal?
Yeah, but I think all you need to do is call up the Mag 7 and look at whoever has not had a gap higher in the past 3 months, which is why the only reason I was nailing Amazon. So the obvious play here is going to be Meta. I would say this is probably the biggest opportunity in the Mag 7. If you're literally willing to abandon Meta because they had a Fugazi quarter and got a little jammed up, you gotta think about, you gotta better have a conversation with yourself, because I tell you right now,
or maybe your lawyer
or your attorney for sure. But I can tell you what, the folks at Meta know how to make money.
Yeah,
they know how to make a lot of it, and buying Meta at a lower stock price is not a terrible concept.
In absence of any great trade out there right now, that's actually one of the ones that I like. I have that on my personal account. They're calendar call spreads, but I have some long deltas in Meta and in Microsoft post these earnings move. I mean, these are some of the bigger names, and if AI is the theme right now, these guys are at the forefront already, right? I mean, we've heard about different deals and things that they've had happen at times. So those are two of the more interesting trades for me right now.
And even if the IV is kind of not that hot, I still don't mind some put spreads, just as relatively low risk, relatively easy money on the board in the Mag 7 is running put spreads 45 days out on Microsoft and Meta. Even if you give yourself a little wiggle room on the downside, doesn't seem like a terrible concept.
I like it.
I mean, I will say this. To my mind, Microsoft looks a little bit better than Meta here from a
technical standpoint, yeah, for sure.
Perspective, from a technical perspective, at least it's near the bottom of a range where it's held, sort of give or take, rather than in apparent free fall. I would want some sort of an uptick out of Meta. I don't need to buy the absolute bottom. I would just need to get some kind of a wiggle to the top side to show where that bottom is, maybe, at least hypothetically, if it holds, and for that to give you a little bit of a better risk-reward math, at least to give you a jump-off point. So
I agree with you, but I would
wiggle here. You say, okay, back up here, maybe.
I agree with you, and that's prudent. I mean, that really is right. I mean, that's something that we're taught. We learn that, those of us who learn trading, because you don't want to be catching a falling knife. We'll pause it and say, this is Meta we're talking about in this situation. I think you at least start building a position, a small one, because when it goes, it's going to go, and you're not going to be able to get in. I mean, it's going to be
And
gone.
might I also offer that the IV rank is higher in meta, so the put spread gets you a little bit more meat on the bone.
That actually is an excellent point. Selling puts here does let you kind of look at this and say, well, you know what? I don't need to pick the absolute bottom. I just need for this thing to get less squirrely.
Yeah.
And that's it.
Run them at 600. You know, give yourself a little room. Run them at 600, 45 days out. Free money.
Well, let's take a look here. So we're at 637. Let's say we're not going to get greedy. We're going to look for a return to like 700-ish, to whatever this underside was, as a kind of preliminary idea.
Sure.
Okay, so if we did that, let's go sort of classic tasty methodology, in this case, 46 days out. And what we're going to do is we're going to short a put vertical here. Let's see where our liquidity is. It's not bad. And let's say if we were to push this out, as we said, to 700 or so, it's not the worst. I mean, we're not quite looking at 2-to-1 risk reward, but it's not awful by any stretch of the imagination. If we decided to essentially sit right here and say, okay, I'm just going to have a really tight sort of backstop here, where if it wants to keep going and doing, to your point, let's say you give yourself room out to 600.
You go.
Okay, a little bit. It's not as great, but you really don't have to go out that far. I mean, if you were, let's say, even just keeping the leash here real tight and said, you know what, I'm going to get in at the money here and maybe backstop out to 620,
Sure.
something like that.
Okay.
It's not too bad.
Not at all. I mean, this is one of those
Not too
names
bad.
where I wouldn't really mind being
And you
short
have to
some
look
at
at
the
the
money.
probabilities. Sorry, Jamal. You also have to look at the probabilities.
Yes, I mean,
You got a 2/3 chance this thing pays, as far as I can see.
well, so the probability of profit here, 52%, but also you're close ish
To 1-to-1-ish.
to one.
Well,
to one. I mean,
80
you're not
cents,
quite
80.
there, but it's not the kind of big skew against you that you'd hate. And of course, you're selling puts here, so you're getting paid up front. So not the worst. If, on the other hand, and I would probably, because I'm a very neurotic risk reward sort of a purist.
Let's go to your Microsoft. I know you guys.
If you went to Microsoft,
that's right.
and said, okay, let's just see if we can run this back to 550, 560. So back to these highs. So if you did that, again, 46 days out, and in this case, we're going to go long the calls. And let's say we ran them 560, by the way, nice and liquid.